This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, Torsten Slok out with a paper seconds ago from Apollo. The American economy, Paul, firing on all cylinders.
Yeah, he's been very bullish here about this. He says, hey, there's no real slowdown out there. He's not too concerned about inflation here, so he's been pretty bullish.
And yet worldwide, race to the bottom. That's my theme this morning, folks. The Swiss bank really surprises. I'll talk about it later, about the fanciness of Euro Swissy, but a big 50 beep rate cut out of Switzerland. They're defending too strong a currency. They want to go the other way. ECB, is the ECB today? My head is spinning. It's
I think
today.
It is, yes.
It's 8:15, and then Lagarde will speak and all that. And they're going to cut rates. Japan is pulling away from raising rates. And really why Paul and I were in our preparation meeting with our staff of 30, somebody leaned over and whispered in my ear, the Chinese cut rates. And there they are.
Yep, there they are.
So it's a race to the bottom morning here with a new lower interest rate regime. Futures at -11, the VIX under 14, to say the least. Bloomberg Surveillance this morning and all the entire morning across the nation. We're brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Oppenheimer thinking. Call an Oppenheimer professional today. And we thank Oppenheimer, OPCO, we thank Oppenheimer for their support this morning. What do you see, Paul? What are you looking at?
I mean, I look at, futures.
Besides Belichick.
Exactly. Belichick to North Carolina. Good for him. He'll enjoy Chapel Hill. Good barbecue down there. S&P down 12, Dow down 77, NASDAQ down 70. We'll wait and see. It's early.
Dollar flat.
Yep.
Off of all this gyration.
Yep.
Jane Foley yesterday.
Your VIX is still under 14, Tom.
And like you say, okay, race to the bottom. And as Torsten says, America firing on all cylinders. From the Interactive Broker Studios, she is firing on all cylinders. Our Bloomberg Business Flash, Lisa Mateo.
As always, good morning. Yeah, futures, they're slipping right now. This is after the NASDAQ closed above 20,000 for the first time. Let's start with NASDAQ futures. Down about 0.3%, 68 points, but at 21,775. Dow futures, down about 0.1%, 72 points. We have S&P futures down 0.1% or 11 points. The two-year yield, 4.18%. That's up 2 basis points. The yield on the 10-year, 4.30%, and that's up 2 basis points. As you just said, just over an hour from now, the ECB expected to cut interest rates for the 4th time this year. So we'll check in with the euro right now. It's little change. We have the stock 600 right now, down about 0.1%. This all comes. The Swiss National Bank delivered a bigger than expected half-point cut to its key rate. That's weakening the Swiss franc. Then you had Brazil's central bank. They delivered a 100 basis point hike and promised 2 more years of the same. Moving on right now, we have the Bloomberg Dollar Spot Index. That is little changed. Bitcoin, gotta point it out because it's over 100,000 again. Shares of Adobe, you're welcome, Tom. Shares of Adobe down 10%. Disappointing annual sales outlook, kind of sparking these fears that software may lose out to AI-based startups. Then after the bell, we're on to Broadcom and Costco. Also following shares of Tesla, they're up 10%. The stock closed at an all-time high yesterday. And with the value of Tesla and SpaceX soaring, you know what that means? More money for Elon Musk. Yeah, has become the first person ever to be worth $400 billion. That is your Bloomberg Business Flash. Wow. Tom and Paul.
Wow.
Yeah, I'm looking at Rich Go. I mean, $447 billion, and it's almost double his net worth. He's up $218 billion year-to-date increase in his net worth. So good for Elon Musk.
Wow. How about philanthropy? We'll have to see. We say good morning, everyone. We start strong here with a global outlook to frame out maybe what you're doing across this nation. Virginie Mazenouv joins us with Allianz, their global CIO. Virginie, just as simple as I see these rate cuts, is it a race to the bottom to cut interest rates?
Thank you, Tom. I think there's two trends going on here. The first one, of course, is this loosening of monetary policy post the tightenings we had, post-COVID, et cetera, et cetera. But the other one is possibly reflecting weakness in some economies or preventing currency appreciation for some others. We know that with the tariffs that are going to come in 2025, part of the competitiveness adjustments is going to take place through currencies. And I think that's part of what we're seeing now.
Paul, she sent a 26-page PowerPoint.
I'm looking at it.
Yep. I mean, did one of the interns go through 26 pages?
I'm working on it right now.
That's like the only way you can do that with Mazenov is a long European lunch.
Yeah,
it's like one of those 2-hour extravaganzas.
Exactly, a bottle of Burgundy. Virginie, thanks so much. Wondering here, on a global basis, I think about the U.S. market and the valuation. I know the performance has been in the U.S. market, but the valuation is so rich. Should we be thinking some places outside of the U.S. for equity exposure here?
So I think, listen, if you look at it on an economic resilience and growth basis, there's still room in the U.S., in global portfolios for the U.S., but you have to be very selective in terms of valuation in tech in particular. We see the tech concentration, if you want to having picked, and we see a broadening of performance across tech in the next 2 years. So I would definitely continue to have the US in the portfolio based on EPS growth. However, you also have other parts of the world that are much cheaper, as you mentioned. So Europe is one of them. China is another one of them. And I think you have to be very selective. Interestingly, yes. Sorry.
No, go ahead, Virginie, please continue.
The pension reform, so in China, I think is something that I've been watching for a very long time. And it looks like we're going to extend the pilot program that we had in 36 pilot cities to a much larger universe of cities. And the idea there is basically to give tax advantage to people to contribute about $650 a month, tax-free, to invest in the fixed income and the equity market. So that could help a market that's very cheap.
Yeah, I'm busting Virginie's chops here, folks, because it's a 26-page PowerPoint, but it's actually outstanding. Go to Allianz and get that PowerPoint from your Allianz Global Investors representative. It is a spectacular deck of intelligence. And with that, Virginie, what is the purpose of these rate cuts? I mean, if we understand that all monetary policy is an ambiguous outcome, can they actually pop GDP with a race to the bottom set of rate cuts?
Well, I think, part of it clearly is rate cuts have an impact on the cost of financing for companies and people. And if growth is coming down or is lower, like we have this weaker growth environment in Europe, combined with political, as we know, volatility there, I think that will help. You also have that currency adjustment relative to a strong dollar that I think is going to be very important. So it's not the only measure. You also need fiscal measures if you want to have more support for growth. But I think it's definitely important.
Virginie, we're a little bit more than a month past the U.S. elections here. Did you guys at Allianz change your view of the U.S. market with this new administration coming in January?
So, we actually had anticipated quite, the outcome that we had. And of course, what's really interesting is the markets today are quite favorable based on the focus on deregulation and tax cuts, et cetera. What we've not seen, because we don't have much clarity on it, is the other side or the more challenging areas, particularly as it relates to tariffs, the global supply chain redesign, and what that's going to do to different parts of the global competitiveness, if you want, chain. And that is what I think is going to be really center stage for the first quarter 25, inducing some level of volatility.
Can you call for dollar weakness, Virginie Mazenov?
That's very interesting. That's a very important topic. So on one hand, you'd think growth is higher in the U.S. And therefore, there is room with potential inflationary input from tariffs, etc., to keep rates higher for longer or less slow faster, right? On the other hand, so that would mean strong dollar. On the other hand, if you look at the impact of some of the policies and the increase in budget deficit, which might go above 8%, that would mean potentially pressure on the dollar. So we have to see how the growth measures are going to be balanced and financed, and how the bond market will react.
Absolutely unusual time. Virginie Mazenou of Allianz, thank you so much. Terrific deck there, I should point out as well. Futures at -10, Dow futures -67, the VIX under 14. With our news in New York City is Michael Barr.
Thank you very much, Tom, Paul, Lisa. New York City police say the gun found on the suspect in the killing of United Healthcare CEO Brian Thompson matches shell casings at the scene. NYPD Commissioner Jessica Tisch says other lab results matched the suspect, Luigi Mangione.
We're also able at our crime lab to match the person of interest's fingerprints with fingerprints that we found on both the water bottle and the Kind bar near the scene of the homicide in Midtown.
Mangione is jailed right now in Pennsylvania on weapon and forgery charges. FBI Director Christopher Wray, facing pressure from President-elect Donald Trump, announced he will resign at the end of the Biden administration in January, more than 2 years before his term was set to end.
I love this place. I love our mission, and I love our people. But my focus is, and always has been, on us and on doing what's right for the FBI.
Trump had announced his plan to nominate Kash Patel for director. President Biden has commuted roughly 1,500 sentences and has pardoned 39 people in the biggest single-day act of clemency. The commutations are for people who have served out home confinement sentences for at least 1 year after they were released. South Korea's president defended his martial law decree as an act of governance and denied rebellion charges, vowing to fight to the end in the face of attempts to impeach him and intensifying investigations into last week's dramatic move. Yoon Suk-yeol's statement came hours before the main opposition Democratic Party submits a new impeachment motion against Yoon for a floor vote this weekend. Finally, North Carolina and Bill Belichick. They have agreed to a 5-year deal for the 6-time Super Bowl winning head coach to become the Tar Heels' next football coach. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
So it's a huge shift, isn't it? I mean, you're going to walk-ons and recruiting. I get he gets other people that do the recruiting.
Yeah.
Do you want to play with Bill Belichick? That's a sales job. But what's the biggest shift from NFL to college?
Well, especially for Bill Belichick, because you're talking old school coach. And old school coaches, you know how they can be sometimes. You know, they pull that Vince Lombardi move, man, to start yelling at the players. Can you do that today with college players?
Oh, Lisa's in on this. What do you think, Lisa?
No, because we see, I mean, even I just know from all the coaches that my kids have had, and it's, if you have an old school coach, it's very different nowadays. The kids take things a little bit differently than we used to back in the day when you just take it in, shake it off, and just go.
Our coaches were so tough. John Lloyd used to go back in the corner of the ice rink and throw up. They skate us into the ice. I mean, old school's out, huh?
I don't know how it's going to happen. So.
But if you want to play in the NFL, maybe this is the place to go. He'll get you in the NFL.
Yeah. You'll learn football.
That's the pitch.
Very cool. Very, very cool. Yes, I got an email. We'll talk to Michael Barr about the 49ers. They play tonight at the Barr household. It's a big deal. We'll try to squeeze that in here as we can. Futures at -10. Jeffrey Rosenberg coming up here at the bottom of the 7 o'clock hour. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, right now they're falling. This is after stocks rallied following CPI data that fueled those expectations the Fed will keep cutting interest rates. Today, we'll get another reading on inflation. We have producer price index for November, initial jobless claims for last week coming up at 8:30 Wall Street time. We have NASDAQ futures down 0.3%, 70 points. Dow futures down 0.1%, 62 points. S&P futures down 0.1% or 10 points. We have the 2-year yield 4.18%, up 2 basis points. The yield on the 10-year 4.30%, and that's up 2 basis points. To currencies, the Bloomberg Dollar Spot Index, that is little change right now. I want to head over to the euro. That is little change. This is just ahead of an ECB decision in about an hour from now. Also keep in mind, Emmanuel Macron expected to name a new prime minister today. Companies making news. Microsoft. The company says it's going to record an $800 million impairment charge. That's tied to its minority investment in General Motors' Cruise robo-taxi program, which is shutting down. Microsoft shares down 0.3%. And Meta donated $1 million to President-elect Donald Trump's inaugural fund. And speaking of Trump, sources say, well, he's expected to ring the New York Stock Exchange opening bell today. It's at 9:30. Shares of DJT up more than 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Got to continue the story. Michael Barr, for those of you nationally, Michael Barr was doing the local cut-in here. We're talking about drones being sighted over 8 New Jersey counties, and they're worried about Bedminster Golf, the president ringing the bell today, and they're worried about his golf course. Forget about it. Golf course. We have intelligence here, surveillance intelligence that they've triangulated over Paul Sweeney's house. Pray tell, have you seen any drones?
I have not seen a drone yet in the great state of New Jersey, but I've seen everything else in New Jersey can offer you over the last number of years. But I mean, it's Jersey. I mean, good luck.
I mean, does it sound like a prank? I don't think so.
No, it's something more than that. And there are a lot of people that are really into this thing, but I don't know. I have no idea what it is. So
John Tucker's off today. Could be. Could be a correlation there.
There could be correlation there. If you don't see John Tucker in a drone, what do you think here? So we'll see. But I mean, I don't know what interest could they have in New Jersey. I have no idea.
Your drone update. Usually we're with Jeffrey Rosenberg of BlackRock when we're breathless. The Fed's cut rates. Blah blah blah. Today we pause and we have a quiet or more serene Jeff Rosenberg. He comes in cardigan. He's like casual. It's like not Fed Day or Jobs Day or CPI Day. An intelligent conversation. How hard is it to be at BlackRock and be trying to figure out coupon or total return? Is it a fun business now, or is it brutal every day to make the right decision?
Well, there's just a lot of cross currents, and although it seems kind of quiet, it's about an hour and 10 minutes till we start the morning in fixed income, and then it's ECB day actually. So it never stops.
Is the stuff you learned at Tepper at Carnegie Mellon valid now? Is the textbooks help you in this fixed income market?
It's a great question, and I talk a lot to new graduates, and I look back on I was the third program at the Carnegie Mellon computational finance program, and what was important is that you learned how to learn. You learned how to keep your skills relevant because, like, for example, when I was there, like, the credit derivatives market hadn't yet even been invented, but the underlying kind of intellectual foundations of that was interest rate derivatives. And so I had the interest rate derivative background, and then when credit derivatives became kind of invented, it was all based on the same kind of academic theories.
I want to get this in quickly. Paul wants to jump in. We've got Jeff Rosenberg of BlackRock with us for this entire 2 blocks into 45 after the hour. I was in the St. Regis Hotel in Beijing, and Gillian Tett did an article on something I'd never heard of, CDO squareds, a million years ago. Are we back to that now with derivative cuteness? Are we doing an 06, 07 redux?
So, It's a quip somewhat attributed to Mark Twain. History doesn't repeat, but it rhymes, and I think that's the way to think about cycles and financial cycles and innovation. But particularly around credit. We've had credit cycles from time immemorial. This one is particularly interesting, right? Because it's in the post-GFC environment where we've seen something we've never seen before, right? This massive expansion of liquidity from a step function change in the role of central banks and the amount of liquidity in the market. And liquidity is the essential ingredient in extending a credit cycle, right? My favorite, probably greatest quip of all time. Hats off to the source of this one, which is coming to a movie, on Christmas Day with Timothée Chalamet. A rolling loan gathers no loss. And what allows you to roll over those loans extends a credit cycle, and that's liquidity.
Yep.
So this has been a 15-year-long credit cycle. And so you do a lot of things when there are a lot of liquidity in the markets, and you extend, and things build up, and we'll see. It's not history repeating. We're not doing CDO squares. We're not leveraging up subprime mortgages, right? That's why we don't repeat those things, because we look at those mistakes and we fix the past mistakes.
But I'll tell you,
looking forward, you always find new ways to find new sources of
Jeffrey,
yield.
but the best performance year to date in fixed income has been U.S. corporate high yield, U.S. leveraged loans, up 8-9%. I mean, do I take that risk going into 2025? Do I take that credit risk going into 2025?
So we're at almost through. Depends on which metric you look back in terms of history, but we're at or close to the tight levels of spreads observed in those markets. So you can take that risk, but you've got to understand what your distribution of outcomes looks like. It's a carry trade. It's an income trade. Mm-hmm. Now, why are the spreads so tight? Because corporate balance sheets, corporate profits, despite all the back and forth about what is GDP doing and what's inflation doing, corporate profits have powered through. So with the inflation story, what has happened is pricing power. Yep. And so corporate profits really are what are driving corporate risk premiums. And there's one other thing that's really interesting happening in this market about Tom's earlier question in terms of innovation is kind of what you're measuring in the public markets is changing, because we're redistributing the balance of credit risk between bank underwritten credit that stays on bank balance sheets, public credit markets that we measure in those indices, and then the types of credits that are being increasingly found underwritten in the private credit market. And that distributional change makes some of those historical comparisons a bit different. But the bottom line is spreads are very tight. Could they go tighter? Maybe, but you should expect that your carry is going to be the best case scenario, and that if there's any kind of surprise to the downside, you're going to be looking at some price erosion from spread widening in the 2025 outlook.
What does your Federal Reserve do on December 18th?
Oh, wow. I think if we pull up the Bloomberg function WIRP in Cincinnati, you will. It's radio. That was a radio joke. Hopefully everybody got it.
Is he auditioning here? Should I just see it, Tom?
So I think it's 100% or 99% expected. So the Fed is kind of backed itself into the corner and doesn't want to disappoint market expectations. But you look at that inflation print yesterday, you look at the ease of financial conditions. Tom, you've seen me say this on every FOMC, every payroll meeting, that the disconnect here, and it's been a disconnect for a long time, is the disconnect between the Fed's view of how tight policy is and how easy policy is when you measure it by financial conditions. So they're going to give another cut, and then next year they're going to slow things down.
We're going to pick up this conversation. Jeffrey Rosenberg with us on the day of the ECB, an extended conversation with Mr. Rosenberg of BlackRock. He's got a 1-year Sharpe ratio to die for. To get a stick 0.35 on a Sharpe ratio, 1 year is pretty much better than good. Paul, he's loaded the boat on the 2-year.
Okay, no
he came
problem.
in January 1st and said, load the boat on a 2-year. And that's it.
I had no problem sitting there.
It's that easy.
Yep.
We're going to come back with Jeffrey Rosenberg on the not so
Another
easy
University
task.
of Wisconsin guy. God, these people are all over the place.
They're all over the place. It's great
I don't know what it
programs.
is.
And it's got
Pound
different.
for pound, the best.
There's like Madison, which is where there's like 12 Democrats there, no Republicans.
Yep.
And then there's Whitewater or something. Darda's from there too. Did you know Darda in school?
Did not.
No, you did not. You're right. There's a lot of people from
I'm telling you.
Wisconsin.
Milwaukee, pound for pound, the best portfolio
We'll
manager.
have to see. Futures to -10. We're with Jeffrey Rosenberg of BlackRock, worldwide across the nation. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures slipping. This is after another fresh all-time closing high for the NASDAQ, reaching above 20,000 for the first time. So we'll start with NASDAQ futures. Right now, down about 0.3%, 71 points at 21,721. The Dow futures, little change, down 40 points. S&P futures down about 0.1% or 9 points. The two-year yield, 4.17%, up 2 basis points. The yield on the 10-year, 4.30%. That's up 2 basis points. To commodities, we have Brent crude lower, $73 a barrel. WTI crude a bit higher at $70 a barrel. We have spot gold lower at $2,711 an ounce. To currencies, we have the Bloomberg dollar spot index. That is little changed right now. The Japanese yen up about 0.1%. The euro stronger, British pound weaker. We have Bitcoin up above 100,000. Few stocks on the move. We'll start with energy drink maker Celsius, up more than 2%. JP Morgan initiates a company at overweight. Deutsche Bank also initiates at hold. Then you have consumer credit reporting agency Equifax gaining about 1%. That was an upgrade from Morgan Stanley to overweight from equal weight. And finally, human resources management software company Paycor. That's up 2%, and that's after a raise from BMO Capital Markets to outperform from market perform. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Tomorrow, we are thrilled to announce, I believe it's tomorrow. Today's Thursday, right?
Yes.
Can't keep track.
As far as I know.
Tomorrow, Gene Munster. Tomorrow, Dan Ives.
Whoa.
Tomorrow, together.
Wow.
On Mag 7. Steve
I'm coming
Ratner's
in
over
then.
at Morning Joe right now talking up Mag 7. We have Dan Ives and Gene Munster together. I think it's in the 8 o'clock hour. My people haven't briefed me, but the answer is this is a huge deal.
Okay.
Year end. They don't talk to each other.
No.
I mean, they barely get along. So to get them together is, it's sort of like Rogoff and Stiglitz. Like, I play nice and then they are. Speaking of Rogoff and Stiglitz, on the ambiguity of our economics, Jeffrey Rosenberg with us with BlackRock this morning. Rates go down. It's ambiguous. Does it goose GDP, or is it a question of a slower demand? You go down, you get China deflation or massive disinflation. When you see rate cuts like we see, which of it is it? An attempt to goose GDP or a desperation towards deflation?
So I think for the impact on the U.S., the Fed wants to normalize, and they think that they're tight. I wrote about this at the beginning of this year, and it showed up when the Fed finally cut rates by 50 basis points in September. And I called it the new conundrum, right? So you guys will remember the old Greenspan conundrum, right? Then he was raising rates, but long-term rates weren't going up. They were going down because back then China was reinvesting all of its trade surpluses back into treasuries. And we couldn't understand why the Fed couldn't control long-term interest rates. So I've talked about the possibility that we could see the new conundrum. And what's the new conundrum is here, we're cutting interest rates in the short end, but the long end isn't responding. That's exactly what happened in August, right? We cut interest rates 50 basis points. The long end went up. And I think when you look into 2025, right, we've taken down the amount of cuts that the Fed is expected, but they're still expected to cut rates. And if they do, and this is what yesterday's inflation print is kind of worrisome, is we're kind of getting into the consensus around this sticky inflation. Okay, so why are they cutting next month? Next week? Because they want to support the job market and they're concerned about the tightening. So they're showing their hand that there's a little bit of preference for the labor market over the inflation view. Okay, well, that's a problem for the rate cutting cycle because you can cut the front end, but the back end may be more worried about that sticky inflation and worried about some of those longer term issues around debt and deficits and the fiscal policy side. So the rate piece could get very interesting next year where the directionality on the Fed doesn't necessarily create the directionality for the bond market. And remember, most of the bond market returns are going to come from the longer end if you're holding, say, an ag or a typical kind of index portfolio. So kind of thinking that your returns are going to follow what the Fed is going to do in 2025, kind of like what we saw in October, maybe a tricky and problematic way of investing in fixed income next year.
Coming in January, we got a new administration coming in. We have a new Congress that's going to be seated. Did that change the way you guys think about opportunities, risk, reward?
Yeah, I mean, I think we're all kind of going through, it's that time of year, 2025 outlooks.
No, don't tell me you did an outlook.
No, I spare myself the December outlook. But come January, we write here's what we think for this week. And it's basically, this tremendous amount of policy uncertainty. And which policy uncertainty gets unwound or realized first, right? And so the problem is the stuff that can be done quickly, trade, immigration, is the stuff that has a little bit more worrisome uncertainty for the economic impact. And the tax pieces and the deregulation takes a little bit longer to play out. So you have a timing aspect for how this kind of policy uncertainty unwinds in the first part of the year. And right now, no one really knows where that's going to shake out. And it's creating this kind of policy overhang of uncertainty. But, what we've seen obviously in financial markets is kind of the post-election reduction in the pre-election uncertainty that's leading to kind of reduction in volatility, kind of what you might call the everything rally.
So what am I doing on credit? I mean, I could sit here in a 2-year at 4.2%. Do I take credit risk here?
So you can take some credit risk, and as I was saying in the kind of the earlier segment, that the credit risk, you want to preserve some flexibility. You want to preserve some ability to change your portfolio because you really don't have a lot of upside in terms of price appreciation. You don't have a lot of downside when it comes to kind of the base scenario for 2025. The economy's doing well, corporate profits are doing well, but you have a lot of that reflected in the price, right? So you just don't have a lot of good asymmetry on your side. So you want to kind of start the year with a little bit of flexibility. You can own credit here, but I wouldn't be max overweight into my credit position at the beginning of the year.
There's a belief out there, I'd say in the zeitgeist, that the big companies that are riding high right now won't issue credit until rates come down. I don't buy it. That's a consensus view. Is the big surprise next year they're all going to start issuing?
So you got to separate kind of discretionary issuance, which is what I think you're talking about, like where do corporations have the ability to show some flexibility? And remember, like the average maturity of investment grade debt is like 7 years, right? So you've got 15% of that debt coming due every year. So there's just this kind of recycling effect where you're getting issuance because it's just part of the natural.
But then will we
recycling.
get an overlay on top of that?
Yeah, and then the overlay on top of that, you will get some of that because the credit spreads are very tight, so there's very good kind of pricing power. Never mind the rate aspect. The rate aspect is a little bit tougher one to time. So it's really when you see kind of issuers pull back and add, are they getting really attractive issuance on the spread side? And right now they're going to get very attractive issuance on the spread side.
You should see when Mag 7 sends around to all the houses their Christmas gift thing, the holiday. You should see the fruitcake Rosenberg gets.
My God, BlackRock.
It's just unbelievable, the fruitcake.
First call I made. All right, so where's the best value in the fixed income space today as you think about 2025?
Yeah, so I think there's value and there's kind of opportunity. And so I think the value is in the front end of the curve because that's the part where I think if you're going to see some kind of reaction from the Fed's policies in 2025, that's where you're going to see it. And you're not as exposed to what I was highlighting earlier before, this kind of conundrum risk where Fed's cutting rates, but back-end rates are really reflecting more long-term inflation or debt and deficit issues. Value is tough across fixed income because of the tightness of spread. So it's really about relative value and relative kind of risk exposure. Front-end investment grade, there's not a lot of spread, but there's not a lot of risk. So it's kind of an okay place to be. There's no real kind of jump up and down and back up the truck. As I said before, it's more about a little bit starting the year, a little bit more flexibility, a little bit more liquidity, a little bit more defensive on how tight spreads are, and then use that to take opportunities if there's some surprises, which is what we're going to get, right? You just can't predict them by definition. That gives you an opportunity to take advantage then.
What are systemic strategies? That's in your
Systematic.
title. Systematic. What's the difference? Tell me, what do you guys do?
Yeah, so basically the key of what we do is to exploit opportunities in the cross-section, right? And look at alpha opportunities. And what we do is take out, so much of what we talk about in the markets is the direction, right? Are rates going up? Are rates going down? Look, the reality is getting the direction right is pretty hard. So if your alpha source, if your outperformance source is betting on direction, it's you get maybe 4 times a year to make that correctly. If you look inside of financial markets, inside the what we call the cross section, there's a lot more opportunities to take advantage of the key driver of alpha, which is dispersion, and that's kind of like the centerpiece of our systematic strategy.
And over to equity markets, folks, what you just heard from Mr. Rosenberg is gospel. I can't say enough how wrong the financial media is on this, of focusing on vectors out 6 months. They change like an aircraft carrier turning around in the Mediterranean, and the grind is day by day looking for that differential in price, which if you're BlackRock, you got to use Greek letters. I mean, you went to Carnegie Mellon.
$300 billion doing this system.
He named his third kid Epsilon. I mean, what's that about? Jeffrey Rosenberg, thank you so much.
Thank you very much, guys.
Wonderful to have you in studio. And particularly, this was great. It's not like, what did the Fed do? What about paragraph 3? I mean, it's a different Jeffrey Rosenberg with BlackRock. Futures at -11. The ECB this morning. Ives in Munster tomorrow. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Donald Trump has reportedly invited Chinese President Xi Jinping to his inauguration next month. That's according to a report from CBS News. Bloomberg Government's Jack Fitzpatrick has more from Washington.
It would be unprecedented for Xi Jinping to accept, and it's notable even that the invitation reportedly has gone out. We don't know for sure because Trump hasn't commented on it directly if he really even thinks Xi would accept the invitation, or if this is something to be nice and to send a signal that he wants good relations with China, despite all his comments on the campaign trail about tariffs on Chinese imports and the general kind of combative tone that he often takes about relations with China.
Bloomberg government's Jack Fitzpatrick in the nation's capital. New York City police say the gun found on the suspect in the killing of United Healthcare CEO Brian Thompson matches shell casings at the scene. Police also said that lab results match suspect Luigi Mangioni's prints to a water bottle found near the scene of the killing. Manhattan District Attorney Alvin Bragg says he is sure that they've charged the right suspect with second-degree murder. Bragg says there might also be additional charges.
We intend to learn more, and we have a lot of things to do. And, as things go forward, there may be additional charges to bring.
Mangione remains in Pennsylvania fighting extradition to New York, but Bragg says he's confident the 26-year-old will be extradited. President Joe Biden is commuting the sentences of roughly 1,500 people who were released from prison and placed on home confinement during the coronavirus pandemic and pardoning 39 Americans convicted of nonviolent crimes. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. A couple shout-outs here. We talked about Helsinki yesterday, north of Helsinki. Thank you for listening. In Finland, I got a lovely note from the University of Chicago.
Nice.
They grinded it out there, master's program. It's like serious stuff.
It's awesome. They're great.
Thank you for listening at the University of Chicago. Of course, we love the faculty there going. One of my most magical days, Paul, was interviewing Milton Friedman and Robert Lucas on the same day. Professor Friedman, I think, was 92. He dropped the phone in the middle of the interview and just kept talking while he picked it up.
Very good, very good.
And we say good morning in New Brunswick. Have you ever been to New Brunswick?
In Canada?
Canada, Lisa?
No, please.
New Brunswick,
New Jersey.
Yes,
No.
New Brunswick,
New Brunswick,
I've been there.
Canada. It's like,
No.
it's like
Is that
it's
Nova
like
Scotia
it's on the
or
flight
something?
path in from London, and it's gorgeous.
Okay.
It's one of the they make
Lovely.
hockey players.
Big time, big time.
There's Newfoundland and
Yep.
New Brunswick. I've never been.
Okay.
Good morning. Thank you for listening. In Canada as well. We're on Apple CarPlay, on Android Auto, on Sirius XM Channel 121. Good morning on the corridor from 99.1 FM up to 92.9 FM, Mount Katahdin down to Block Island, and Bloomberg 1130 in Donald Trump's New York. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling this after November's consumer price index. Well, it came in as expected yesterday. Traders took that as making a Fed cut a near certainty. Now, in just under an hour from now, we get more data. We have the producer price index, also initial jobless claims for last week. Ahead of it, NASDAQ futures down about 0.4%, 92 points. Dow futures, little change, down about 35 points. S&P futures down 0.2%, or 12 points. The two-year yield at 4.18%. That's up 2 basis points. The yield on the 10-year 4.30%, and that's up 2 basis points. To currencies, the Bloomberg Dollar Spot Index, that is little change. We have the Japanese yen, that is up about 0.2%. The euro, little change. The British pound down about 0.1%. Bitcoin above 100,000. Yeah. Companies making news. NVIDIA, I got to point it out. Sources saying NVIDIA adding hundreds of staff in China this year, focusing on new autonomous driving technologies. And then we go to EV maker Lucid. Its CEO said it's in talks with multiple automakers about potential partnerships. It wants to share costs, also intellectual property. And finally, speaking of property, a little real estate news. Michael Jordan finally sold his Chicago mansion after 10 years. A big discount, though. Records show it closed at $9.5 million. The initial asking price on Zillow was $29 million. That is your Bloomberg Business Flash. Paul and Tom.
That happens to a lot of these megas. They go on for some big number and they wait for like an adult to show up and pay whatever they're worth.
I mean, who needs a house with a basketball court and things like that inside? You know, I mean, come on.
32,000
it's Chicago. Who's paying $29 million in Chicago?
The Mateo house, they got everything else.
Oh, I know.
She's got an ice rink in the backyard.
Sure.
It's interesting. David Rosenberg out of Toronto, he's been very cautious and he really makes note of this economy, throwing caution to the wind. It's still working. David Rosenberg. Paul, this goes to what we were talking to Mr. Rosenberg about. Jeffrey Rosenberg.
Yep.
Excess economic capacity means the Bank of Canada must get rates lower.
Lower. Okay.
And this is, again, this ambiguous tone. Why are we cutting interest rates?
Yeah.
We're cutting interest rates because the demand isn't there. The excess capacity is too much. Yeah. That's one theory.
So we'll see. December 18th for the U.S. Federal Reserve, Tom.
Yeah.
I got PPI today, so we'll get a little bit more sense of kind of how inflation's looking in this economy.
We'll have to see. We're here with the ECB coming up. Lagarde speaking. You know she's going to move the markets. And then, of course, on again tomorrow, I really want to emphasize Dan Ives, Gene Munster, in this year Mag 7 and Tesla together. Big event for us tomorrow as well.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The daily look at the front pages. It's the Lisa Mateo Minute, and it's brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Okay, take more than a minute.
Wait a minute. I went from an hour to a moment to a minute.
Al from New Jersey emailed in and said, you got to give her less than an hour.
Here we go. Okay, I want to start with Netflix because there are reports that it's walking back its parental leave policy. This was in the Wall Street Journal. So about a decade ago, Netflix announced that it was offering new moms and dads, Paul, you're going to love this, unlimited time off in the child's first year, okay?
18 years.
But a lot of more staffers took advantage of the benefit than they thought. So the Wall Street Journal, they spoke with workers, former workers, who say the company spent the last few years kind of stepping back. They haven't taken it away per se, but they're offering vague, conflicting guidance internally. The reason why the company's been growing, right? They now have like 14,000 employees, more than 60% jump from before the pandemic. So they have to start making some changes.
And I think it's Wall Street focus on profitability, not just growth.
True.
So I think the company's saying we need to look at all of our costs here. And if
when your first kid was issued, how many days did you take off?
I had twins, and my
how many days did you take off?
I was back on the road the next week.
I took 3 days off.
Twins.
Cash flow. Cash flow came out. He was issued, and I took 3 days off. And granted, that's stupid.
It is. I'm not saying it's
completely stupid.
No, it was.
But come on, Lisa, how long should maternity leave be, or paternity leave?
It's tough. I know I myself only had 3 months, and then I had to take vacation days. So it's different.
It's much better now.
Different everywhere
it's much
you go.
better
Yes.
now. And like here, I think we have a very good policy.
We have an
here.
excellent policy
Yes.
here, and even
Would
dads
you
are
like
included.
to, excuse me, did you want to tell us something here? Is there something we need to know?
I am way past that.
Tell Mr.
That ship
Mateo.
has sailed.
Next.
Okay, reality TV shows. I'm not sure if you guys are fans of any reality TV shows, but Netflix has one. It's called Love is Blind. The reason I bring this up is because the National Labor Relations Board has brought up this complaint, and it could start allowing them to become union members. We're talking about the castmates of these shows. Okay, it gives it because they're talking about different federal legal protections, opening the door to unionization because it classifies the show's contestants as employees. That's what they're trying to fight. A lot of the contestants have been fighting this. There's been lawsuits back and forth about this, but it's this particular show that's kind of starting this and opening the doors to other shows and saying, hey, wait, maybe we should start.
Well, one of the
doing this
reasons
too.
that the broadcast networks and the cable networks like reality programming is it's much lower cost.
There's no script writing.
There's no script, any of that kind of stuff. And since there's less advertising revenue because of cord cutting, that's all you're seeing on broadcast television these days on the networks are these reality shows. It's very rare that you see a scripted show on the networks these days because they're just too expensive.
Season 7 was really, it started slow.
Of Love is Blind?
I mean, perfect husband, but, and, you know, the tables have turned. But then I love in week 2 where they had dirty laundry. I mean, you know, it was just a great episode.
I have to be honest, I didn't know what this show was. Apparently, like, they date one another from separate rooms. They don't even see one another. They hear it through speakers until they agree to get engaged.
Give me happy days at 8 o'clock on Tuesday
John
nights.
Farrell's the one that turned me on to Love is Blind. It's his fault. Next.
Okay, Sports Illustrated coming to a stadium in New Jersey. Okay, we're talking soccer. They're buying the naming rights to the 25,000-seat soccer stadium right near Newark. It's the home of the Red Bulls.
Yeah, it's a
home
great
of the
stadium.
Gotham. Yeah,
Great
stadium. I've been there for a game. 13-year deal, reportedly worth more than $100 million. But the only thing is that it has little to do actually with Sports Illustrated, because if you know, they're owned by Authentic Brands Group, which kind of buys up companies that are under pressure, sells the licenses for the use of their names.
Do they still make the magazine?
They do
Digitally
still
or
make the
print?
magazine. They're just not making as much money, I guess. But that's why they do agree to go with Authentic Brands, because now this company gives them money because it helps sell off to the use of their name. So
Similar thing with Playboy, by the way. Just throwing it out there.
They did that too. Okay.
Having covered that stock for many years.
But it's also owned Sports Illustrated tickets. And I just bring that up because now that ticket company is going to be the exclusive ticketing partner of the team. So that's another difference.
30 seconds speed. What do you got?
Okay, last one we have. The price of groceries, sky high. So what's the solution? Well, there's someone running for New York City mayor. His name is Zohran Mamdani. He says that we should think of doing city-owned grocery stores. That's what it is.
Oh boy.
He says it's going to help bring down the cost of groceries because they're going to use city land or buildings, buy food wholesale, and would also be exempt from property taxes.
On those margins,
I want the city involved in anything.
I don't get how they do it, given the income
It's
statement of the
Kansas,
industry.
Wisconsin are doing it.
Really?
They're trying
Really?
it out.
Oh, okay.
Yes, Chicago, Atlanta, they're moving forward with similar proposals. So it's going to be brought up today. This lawmaker. Yeah.
Lisa Mateo, the newspapers.
Bread lines.
Thank you so much. We got a lot coming up here. Lindsey Piegza is my Economist of the Year. She's going to darken the door in a minute. Really a perfect time to talk to her about her nailing the idea the Fed's going to struggle to bring rates down. We'll get a reset from Lindsey Piegza here. We've got Munster and Ives tomorrow as well. Jeff Rosenberg just with us. I mean, it's the interns.
Yeah. Okay.
Gautam Mukunda is going to join us here. It's a big day for the president-elect in Manhattan. Traffic warning on Fifth Avenue. The basic idea of ringing the bell. Donald Trump, Time Magazine of the Year.
So
Person
awesome.
of the Year.
Very
and
good.
all that.
Ringing the bell today. Good for him.
David Mason is 77. We say good morning. He's got some health issues. We give him good health.
I'm going back to a place that's far away. How about you? Have you got a place to stay? Why should I care when the end of our love.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. I'm having a cup of Sanka this morning because I can't afford the coffee. Eamon's out on YouTube live chat, crazy. Paul. He's talking here about a 5-pound bag of coffee's gone from $42 to $72.
Yeah.
I mean, it's a moonshot, I say.
On the GLCO, the Global Commodity Index dashboard for Bloomberg, coffee up 71% year to date.
Do we know why?
Because there's this coffee belt around the globe. You know, think Africa, think Brazil, all the way around the globe. Drought. That's the issue.
Drought's the issue.
Yep.
Kona Hake. This is what we do at Surveillance. Instead of making jokes about Sanka, it's actually really good.
Yep. Well, Bloomberg does a good coffee.
Lindsey Piegza doesn't even know what Sanka is.
No.
Anyways, the Sanka's great this morning, but tomorrow, the expert on coffee, Kona Hake. We are thrilled to bring her to you along with Dan Ives and Gene Munster tomorrow. Kona Hake on Paul's 114% lift launch in coffee, straight to the moon. Let's get right to it from the Interactive Broker Studios, our Bloomberg Business Flash. Lisa Mateo.
Yeah, and we've got futures slipping after the NASDAQ close above 20,000 for the first time. We'll start with NASDAQ futures up 0.4%, down 0.4%, 100 points at 21,693. Dow futures, they're down 0.1%, 65 points. S&P futures down 0.2%, 14 points. The 2-year yield, 4.18%, up 2 basis points. The yield on the 10-year, 4.30%, and that's up 2 basis points. Just 15 minutes from now, the ECB expected to cut interest rates for the 4th time this year. We'll check in with the euro. It's little change right now. The stock 600, that is down about 0.1%. Now, this all comes after the Swiss National Bank delivered a bigger than expected half-point cut to its key rate. And then after Brazil's central bank, well, they delivered a 100 basis point hike, promised 2 more of the same size. We'll move on to Bitcoin right now. That is up, down about 7 cents per percent, but over 100,000. Shares of Adobe, they are down 10% this morning. This is after a disappointing annual sales outlook, kind of sparking those fears that its software may lose out to AI-based startups. And then after the bell, we're on to Broadcom and my favorite, Costco. Also following, shares of Tesla up 0.2%. The stock closed an all-time high yesterday, and that was amid a $556 billion rally in the past 6 weeks. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Bloomberg Surveillance this morning, and always brought to you by Cohn-Resnick Advisory Assurance Tax. Discover optimization strategies that are helping CFOs to make their finance function more competitive, more resilient. Talk to Cohn-Resnick's advisors. We thank Cohn-Resnick for heritage support. There are people that said rates are going up and inflation's not going back to a John Williams 2% too quickly. Jim Bianco out front. I thought Dr. O'Leary's done a great job. The Citigroup Combine, Hollenhorst and that crew.
They know what they're doing.
Great job. And other people that, the small brain I have it without the Sanka going. But Lindsey Piegza is the one that day after day after day just said, shut up. Inflation's not coming down. She's my economist of the year with Stifel. Dr. Piegza joins us this morning. Lindsey, the global rate cut, the race to the bottom, Is it about trying to goose output, or is it a modest panic about, as David Rosenberg says, too much economic capacity, that there's not enough demand out there, rates got to come down now finally?
Well, I think we're seeing very diverging economic conditions, which warrant different policy for the ECB, the Bank of England, versus what we're seeing from the Fed. We're seeing faltering growth overseas and a much more precipitous decline in inflation. Here in the U.S., growth is averaging near 3% over the past 6 months. And inflation is not showing further improvement, but rather momentum to the sideways, and in some cases, an acceleration in some of these key components.
Right.
So this divergence is very much to be expected, given that differential in economic and underlying conditions that we're seeing abroad versus in the domestic economy.
Up at Harvard, Jason Furman does a great job. He calls it his ecumenical inflation, as he combines all sorts of series. What is your ecumenical treatment of yesterday's inflation report? Can you see a disinflation vector?
Well, I think at this point, there was not enough momentum to the upside to dissuade the Fed from that December rate cut. I do think the committee is going to push through a third round cut next week, given that the increase was in line with expectations. Remember, Fed officials have reset the bar for December, saying as long as the numbers are within our expectations, within our forecast, that's not enough to derail our progress towards further relief for the economy, as long as the economy is still strong and solid but not overheating. So the threshold has been adjusted higher for December, but going forward, if we continue to see inflation at these elevated levels, this lack of progress, as we've seen in the core now for the past several months, I think the Fed is on the verge. They're going to be backed into a corner to take that policy pause sooner than later in the new calendar year of 2025.
Lindsey, we're going to have a new administration coming in next month, a new Congress to be seated. Are you concerned about some of the, we haven't heard much about the economic policies of the new administration, but I guess tariffs are certainly part of it. Tax cuts are part of it. Does that raise materially your inflation concerns in this economy?
Well, it certainly raises the risk scenario. We don't necessarily know how these policies are going to impact the economy, how these policies are going to impact from an inflationary standpoint, because we can't look at them in and of themselves. Large, sizable tax cuts could be inflationary, but we've heard from the incoming Trump administration they're likely to be offset with large, sizable reductions in government spending elsewhere. And so it depends on how this on net plays out from an inflation standpoint, just like tariffs. In and of themselves, not inflationary. But if we see the economy engage in a tit-for-tat retaliatory cycle of consistent increases in tariffs, that then could lead to inflationary pressures. So there's still a lot of question marks, but I think it does raise the upside risk, which in part is why the committee wants to force through as much policy relief as they can now, before they face that potential downside limitation due to fiscal policy restraints.
Lindsey, our economy is 70% services here. How's the consumer doing from your perspective?
Well, the consumer is proving surprisingly resilient. We continue to see consumers out in the marketplace spending on goods and services, which
Wait a minute. Lindsey, you nailed this. Go back 6 months. How did you guess that the consumer would be resilient? What was the pixie dust where you said the gloom crew's wrong?
Well, I think the majority of the analysis was looking at the primary support for the consumer during the pandemic and the immediate aftermath stemming from fiscal stimulus. We pumped trillions upon trillions of dollars into the marketplace. And with that stimulus largely concluding, the notion was the consumer has to fall off a cliff. We haven't seen it yet, but the consumer has to be marching towards that endpoint. And I thought, not so fast, because there's a number of variables that are continuing to support the consumer. During the pandemic, we weren't just buying Pelotons. We were also paying down credit card debt. So the consumer's starting point from this deleveraging allows the consumer to take on a good amount of additional leverage, additional borrowing power, which will continue to supplement the consumer as we've seen.
Okay, so bring it forward. We're running out of time, but this is important. Bring it forward to Paul's good question. Does the Piegza consumer boom continue?
Well, the consumer continues to spend, but at this reduced level of about 2.5% to 3%. Now, certainly nothing to sneeze at, but it is a loss of momentum from a more robust pace as we've seen over the past year plus.
Right.
So the consumer is still the backbone, still the bright spot of the economy, but there is a potential for a loss of momentum, but that's not accounting for a potential change in policy if we do see sizable tax cuts or other supports for the consumer from the incoming administration.
So give me this summary here. The Fed's going to cut rates in December. Do they not cut again until the Red Sox win 5 games in a row?
Well, I can't necessarily speak to that timeline, but the Fed will likely cut rates in December and then stay on hold for at least 2 meetings, for at least some portion of the first quarter. We're looking for just 1 rate cut per quarter, totaling 3 additional rate cuts next year, taking us to 3 3/4. That's 375, and that's a good neutral level for the Fed to target.
We'll talk again soon. Lindsey Piegza, thank you so much for Stifel, just absolutely nailing the growthiness that has surprised all this year. Futures at -12, the ECB in 4 minutes. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. The man accused of killing United Healthcare CEO Brian Thompson is being held without bail in Pennsylvania as he fights extradition back to New York City. NYPD Commissioner Jessica Tisch confirms matches investigators have made as they gather evidence against Luigi Mangione, arrested this week with a weapon.
We got the gun in question back from Pennsylvania. It's now at the NYPD crime lab. We were able to match that gun to the 3 shell casings that we found in Midtown at the scene of the homicide.
Commissioner Tisch also says police were able to match the suspect's fingerprints with fingerprints that were found on a water bottle at the crime scene. South Korea's opposition filed a second impeachment motion against President Yoon Suk-yeol today, with the likelihood of its passage increasing as more ruling party members indicate they will support it. The motion was filed after Yoon made a defiant speech earlier in the day in which he tried to justify his shock martial law declaration last week and insisted he would fight any case against him. Yoon through an interpreter.
국민 여러분. Dear citizens, the opposition party is accusing me as a felon and is now trying to remove me from the presidency immediately. I will not give in to their demands.
The Democratic Party needs to secure 200 votes in Parliament to pass the motion. An attempt to impeach him last Saturday failed to reach that threshold after Yoon's People Power Party boycotted the vote. Luiz Ignacio Lula da Silva's doctor says the Brazilian president was awake and talking following a scheduled medical procedure 2 days after having emergency brain surgery. The 79-year-old president was submitted yesterday for a hemorrhage. Lula fell in the bathroom and hurt the back of his head in October. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Up Madison Avenue in the holiday season, you can walk into a hotel and you can turn left into Bemelman's Bar, which can be noisy and festive and all that, or you could turn right into the silence of the Cafe Carlyle. It is a magical place. Paul, there's only 90 seats there, and you're going to be there in the coming hours.
Yeah, we're going to this evening. We're going to the Cafe Carlyle. Tony Danza does Sinatra. Yeah. Have no idea what to expect. But we love the Cafe Carlyle.
You're right on top of the town.
Right on top of the town.
It's 90 people.
Yeah, and it's just quintessential New York evening. And we do it once every year.
Woody Allen played there.
Yeah, I've seen Woody Allen there.
Bobby Short.
Yep, Bobby Short back in the day. I just kind of feel like it's just one of those quintessential New York City things you can do.
It's very good.
Yeah, so we'll see how that goes tonight.
You're going to mortgage the middle child on this?
Exactly. Yeah, they're not
How
giving
about
these
that martini?
Away. Yeah, exactly. And, the little 2-course meal that they serve you there, it's all good.
I sat there 45 feet. They gave me a rock star seat. Thank you, Carlisle. For Joan Osborne. Remember, What If God is One of Us? And I got the tab.
Yeah.
I Mrs. Keene. I said, we should have ordered cream ale.
Yes.
That's all there is to it.
Yep.
We say good morning to Rosewood and everyone at the Carlisle Hotel. Futures sustain under the VIX sustains under 14, 13.69. Sweeney and Jeff Rosenberg are watching a 2-year yield, 4.17% in about a minute and a half. And we'll bring you the headlines afterwards.
Yep.
We're not gonna miss Michael Barr locally for this. We've got the ECB coming up, and we'll give you those headlines into the Lagarde press conference. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, as expected, the ECB cut interest rates for the fourth time this year, 25 basis points to 3%. So I want to check out and see how the euro's doing right now. It's down about 0.1% at 104.83 against the dollar. And we have the stock 600. That's down about 0.1% as well. Back here in the U.S., we get more economic data today before our Fed meets next week. In about 15 minutes from now, reads on producer prices for November, also initial jobless claims for last week. Ahead of all this, we have NASDAQ futures down 0.3%, 77 points. Dow futures down 0.1%, 51 points. S&P futures down 0.1% or 11 points. We have the 2-year yield 4.17%. That's up 1 basis point. The yield on the 10-year 4.29%, and that's up 2 basis points. Few companies making news. It's Microsoft. They said they would record an $800 million impairment charge. That's tied to its minority investment in General Motors' Cruise robotaxi program, which is shutting down. And Meta donated $1 million to President-elect Donald Trump's inaugural fund. That's something it didn't do for President Joe Biden or Trump's first term. And speaking of Trump, sources say he's expected to ring the New York Stock Exchange opening bell today. He's also been named Time Magazine's Person of the Year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Euro coming off the bid here. We had a 105 to 4 digits, 104.75. It's new recent weakness in the euro. It gets you back to December 2nd, maybe December 4th. Nothing like what we saw November 22nd, but nevertheless, euro weaker here off an ECB rate cut. An incredibly important press conference coming up here where every word will matter. Paul Sweeney and Tom Keene joining us now. Holiday shopping in Copenhagen.
I think so.
How romantic is that?
I know. We sent Gina over to Europe for like 2 weeks to meet Bloomberg clients. Standing room only, every single meeting. That's the demand.
I mean, she's larger than Belchunas.
I know. I can barely get a week's worth of meetings. She's doing
we can
2
barely
weeks.
find time to talk to her. Joining us right now from lovely Copenhagen is the lovely Gina Martin-Audens, our chief U.S. equity strategist. Gina, the zeitgeist, as you have mentioned, is a 13% earnings growth next year. When you line up the 422 people that are working for you calculating that statistic, is the dynamic towards a 10% growth or a 14% growth?
Yeah, I think it's a really critical question, and it's most important because we are sitting in an awkward position headed into 2025 where the market implied earnings growth expectation is even greater than the bottom-up consensus expectation. So while macro indicators suggest we may only get about a 6% earnings growth pace emerge in 2025, bottom-up consensus is thinking 12 to 13%. The market itself is already sitting at 23.5%. So expectations are very high going into this year. And this is stark contrast to the environment that we were in going into 2024 or 2023, in which market implied expectations were low, macro implied expectations were not terribly positive, but a little bit better than market implied expectations. And then bottom up was also pretty conservative. So I do think that the earnings hurdle is going to be a key part of the conversation next year. Companies are really going to have to come in and beat consensus forecasts as well as what is implied by the macro.
Gina, I know you're on a kind of a 2-week tour across Europe, meeting with Bloomberg clients. What's been the kind of the main point, the main question you've heard from European investors as it relates to kind of what you do with the U.S. markets?
Yeah, it really is. How do you balance the 40% of the index that is now dramatically overvalued in tech and communications with the 60% of the index that's potentially undervalued but struggling to record some earnings growth? How do you attack that problem? Followed by, what do we do about Europe? There's a tremendous amount of negative sentiment in the European equity investor community. Generally, European earnings are still struggling to post any earnings growth. That's created a lot of frustration. The geopolitical environment is also very frustrating. That has resulted in a tremendous amount of capital continuing to flood into the U.S. and specifically into the Mag 7. But now that we have decelerating earnings momentum for that group and valuations are so very high, I think the universe of investors is struggling to figure out what to do because nobody feels terribly confident that the index outside of the Mag 7 can actually make up for some losses here, can actually make up ground if the Mag 7 loses a little bit.
I know it's off your remit, Gina, but come on, the sun goes down at 3:36 p.m. in Copenhagen.
I know.
She's almost ready for
cocktails.
hour.
Absolutely.
Gina, I look at
I wish, Tom.
I look at Walmart as a moonshot. I'm looking at Nestle of Switzerland, giving me a 4% dividend with 4% dividend growth, trading at a 17 multiple. It's basically Nestle's trading at half the value of Walmart. Is that a value trap as a general statement on Europe or not?
Yeah. I think it's a great question and certainly one that European investors grapple with every day, not only in the consumer staples index, but also in financials in particular. A lot of concern around autos and luxury goods over here. So I think we do need to consider, how much valuations are really just reflecting structurally slower growth opportunities, structurally lower margins. When we do that, we find that, even on a sector adjusted basis, European stocks are still trading at a minor discount to the U.S. So no matter what way you slice it, Europe is discounted. It's just a matter of gathering some earnings confidence. And I think this is really key for 2025 for Europe. We will need to see some fundamentals back up those valuation discounts in order for investors to gather the confidence to start to put money to work in Europe. But your point on Nestle is spot on. Investors are discounting heavily European equities because they just don't believe in the growth prospects. They just don't believe that, the geopolitical environment is going to work in Europe's favor. There is a tremendous amount of pessimism. I don't want to say everybody's pessimistic, but in large part, most European investors are just pushing money into the U.S., anticipating that is the place to be, and the exceptionalism will continue to weigh out.
Have we seen this before, Gina? This kind of, again, I've just heard about it really over the last 2, 3, 4 weeks, this move of international money into the U.S. Have we seen this before? How common is it? Is it unusual? How do you think about it?
No, I think that it's been happening for the better part of the last couple of years. Investors generally just adopting the trend, almost getting pummeled in to the U.S. trade, if you will, where the stocks just keep outperforming. And when you're a global investor thinking about your allocation of capital, you can't avoid the fact that the U.S. has outperformed precipitously. I do think one bright spot that I have uncovered in my conversations is many investors are finally also interested in diversifying their U.S. exposure beyond the Mag 7. So there does appear to be at least some more scrutiny on small caps. Is this trend real? Is the breakout going to last? Will we see some earnings growth recovery in small caps?
And what's your answer to those questions?
Price momentum? Our view is that small caps are tremendously discounted with a very strong earnings backdrop going into 2025. So small caps are just one of many areas where we see rotation possibilities, not just internationally out of U.S. stocks, but into small and out of U.S. large as a predominant call for the year ahead. Expectations for small caps are still very low. Our small cap strategist, Mike Casper, just wrote a note on the terminal, put it on the terminal today, talking about expectations for small cap growth are sitting right around long-term average at 5% growth. That's very different than S&P 500 expectations, where we're looking at greater than 20% growth. That's only happened 3 times in the last 15 years. And it always happens right after earnings recessions. So small cap setup is a little bit different. It's just it should be easier for small caps to beat those expectations.
Are you milking this trip for all you can? Is it Christmas in Paris for Gina Martin Adams?
You know, I wish, but I have been in 6 cities over the course of the last 2 weeks. It has been very busy. It has been very busy. I have seen a lot of inside of cars, inside of conference rooms, and I'm waving at the city from the car as I drive through.
I used to travel.
But it's been great. Lots of good meetings, lots of good investors.
What you just heard there, folks, is a snapshot of the Bloomberg grind. I literally would wake up in hotel rooms. I wouldn't know where I was, and I'd look out the window and look at the size of the cars. If they were big cars, it was America. And if it was small cars, it was Europe. Gina Martin's killing it for Bloomberg Intelligence. Safe travels. I mean, it's romantic as all get out until it's 6 cities in X number of days. And it's like a blur.
And the demand for Gina Martin Adams is just huge across. We're sending her to Asia in January. I wonder if she knows about that, because it's already booking up quickly all across Asia.
Well, we'll have to see. Bloomberg Intelligence, something Mr. Sweeney helped invent. Futures, -11. Please stay with us. The Lagarde press conference will have headlines. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are just moments away from a read on producer prices for November, initial jobless claims for last week, and this comes after yesterday. CPI data fueled those thoughts that the Fed will keep cutting interest rates. What will we see today? Right now, the feeling ahead of it, well, we have NASDAQ futures down 81 points, Dow futures down 42, and S&P futures down 10. All right, let's start with PPI. Okay, so this is month over month for November. Survey was for 0.2%, came in at 0.4%. When you take food and energy out of the picture, came in right on target at 0.2%. Then we move year over year for November. The survey was for 2.6%, came in a bit higher, 3%. Then you take food and energy out. The survey was for 3.2%, came in a little bit higher too at 3.4%. Can't forget jobless claims for last week. So the survey was for 220,000, came in higher, 242,000. That's compared to the upward revision of 225,000. Okay, so let's get to the reaction. NASDAQ futures down 0.3%, 83 points. Dow futures little change, down 38. S&P futures down a tenth, or about 10 points. We have the 2-year yield 4.14%. That's little change, and the yield on the 10-year 4.28%, and that is little changed as well. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. Jim Vanderhei and Mike Allen over at Axios are talking about the great upheaval. They're talking about a shifting of tectonic plates. We try to get some really important and tight focus here with Wendy Schiller joining us now from Brown University. Professor Schiller, everybody's telling me there's a generational shift. There's all this upheaval. Donald Trump, Time Magazine Person of the Year in that. But the Senate and the House seem very embedded in tradition. When Collins meets with the Secretary of Defense designate, is the Senate working under its normal method, or are they too having a great upheaval?
Good morning, Tom, Paul, and Lisa. Well, it's interesting that you use the word traditional. Others might say they're just exercising their constitutional responsibility to oversee government. And this is where party loyalty, polarization, sort of you're on my team or you're out, meets, institutional, not just norms, but, the checks and balances in a democracy. So that's what Susan Collins was doing. Susan Collins has a little more leeway. She sort of looked vulnerable last time, but ended up winning comfortably in Maine. It looks like she's thinking of running again in a couple of years. She doesn't seem to be as frightened of Trump in terms of her own party standing and her own electoral fortunes in Maine as Joni Ernst, as we saw with Pete Hegseth this week, seems to be in Iowa. So electoral politics is still alive and well. And in this case, it's the president, chief of the party, being popular, really throwing his weight around and saying, listen, I'm going to primary challenge you. I'm going to figure out a way to get you on my side.
Terry Haynes has been brilliant on this, writing. Mm-hmm. He had a day where he wrote like 3 notes out on LinkedIn. Read Terry Haynes on LinkedIn, along with Professor Schiller, trying to look at the ebb and flow of tradition on Capitol Hill.
Wendy, do you expect the Senate to put up some roadblocks to some of President-elect Trump's nominees, some of the more contentious ones, or do you think they're going to roll over and just say, all right, Trump is in charge?
Well, right now, Trump seems to have a couple of things going in his favor. Decent approval ratings coming in as a newly elected president, and sort of the direction of the country. Those numbers were 74% in the wrong direction when the election was held. Now they're in the 60s. So he seems to have momentum, and senators and House members may say, we don't want to go against the momentum. Matt Gaetz was particularly egregious because there was a House ethics report that was really slamming his behavior. So it became just really a loaded thing to do. But it looks like I don't know about Tulsi Gabbard, and the Senate may just decide which of the next set of nominees is so egregious we don't want them. And let's see how Hegseth does. A tight vote is never a great vote for a nominee, and we'll have to wait and see. The tax situation to me is the most interesting dynamic. How the House is coming in with very different priorities on timing on the Trump tax cuts and making sure those get renewed, and the Senate. And we already see significant divide between the House and the Senate within the Republican leadership. And that's a sort of a warning how things will go over the next 6 to 8 months.
Wendy, what do you think is in the... should we think about this first 100 days as we do for other presidents, and at such a critical time to get things done? Is that still the case for a president coming in on a second non-consecutive term? Should we pay attention to those first 100 days?
Well, Paul, in the sense of, president's cabinet is a signal of the president's priorities and the president's belief in government. We have a large government. You can say you want it to be a lot smaller, but right now it's very large and very embedded in every sector of our lives. You have to appoint people who aren't going to mess that up. You can shrink, you can reduce, you can make more efficient, but you can't make it not work well. And this is the big question mark about a lot of these nominees and the 100 days of sort of honeymoon. Things have to get, Medicare, Medicaid, those things have to work. So is Mehmet Oz going to make them work? Is Robert F. Kennedy going to make all this stuff work? Is the Treasury Secretary going to sort of, make sure the economy stays on track? These are things that Trump, he's appointing all the people who supported him, some of whom have been rejected by voters in some states multiple times. So you've got to think to yourself, he's putting a lot of stock in people who may not do do the job he needs them to do. And that's what I'm watching. The next couple of months, we're not going to know.
Right.
But 6 months from now, it's going to have profound effects, I think, on a lot of the sectors of our economy and the way we are living.
Is there any precedent for this? I mean, take it back to Andrew Jackson when everybody was appalled with boots and mud in the White House. You know the drill. You teach it every day. Is there any precedent for so many people coming into an administration that don't have the resume that people are used to?
I was thinking about this actually because of some of our previous conversations going all the way back to Ronald Reagan. And Reagan brought in, I think it was James Watt, he brought in a couple of people. The housing secretary got into some trouble. Reagan brought in some very sharp people, Jim Baker, obviously Don Reagan, like really, Caspar Weinberger, George Shultz. Those were very bright, experienced people. But on the other hand, a couple of the other cabinet nominations weren't, such great, picks. Sorry. So I think that there is some precedent for a very popular figure in the party to appoint a less than stellar cabinet. So this is a big question mark. And presidents, even Obama, have been subsuming a lot of that cabinet role into their own political operation in the White House. So will Trump follow that pattern, which is more recent, and then it won't matter as much who's leading which department?
Wendy, I think it's CBS.
We're going to have to wait and see.
Yeah. Wendy, I think it was CBS that's reporting that President-elect Trump inviting Xi Jinping to the inauguration. What do you make of that? That's interesting.
I think Donald Trump is a norm buster. That's, he's not just a disruptor. He's a norm buster. You can make a long argument about all laws, norms, behavior. He's a norm buster. And he wants to show that he can negotiate a better position for the United States of America economically and militarily than Joe Biden and even Barack Obama or even George W. Bush. That's what he seems to want to do, and this is an opening salvo. And we'll see if he accepts the nomination. I'd like to see security on that day.
Within a transactional style, if you will, again, is there precedent that you can go on a bipartisan basis and find diplomatic success?
Well, I think, you could argue Nixon had sort of a theory of foreign relations with Kissinger, but he was also very transactional and very immediate. Conflict here, let's get out of it. Geopolitical, opening up China. Nixon was pretty strategic and willing to give up a lot.
Yeah.
And let's not forget, the Republicans and the Democrats under Bill Clinton in 1993 opened up, really, trade across the world, starting with NAFTA and then opening up GATT and creating the WTO.
Right.
That changed everything forever.
Right.
And that was supposed to benefit everybody. Trump comes back many years later and says, we didn't get the best deal we should have gotten. I'm going to make it better. He did it
Right.
once already in his previous administration. He's going to try to do it again. And it's interesting to me how much the American public is willing to overlook in personal behavior that some may say okay, some may say not so okay, to get economic advantage. And we're going to see how this strategy actually can work in the next, like I said, next 6 to 9 months.
Wendy, one final question. What are we going to see in the first week of the Trump presidency?
A lot of pomp and circumstance, a lot of celebrating. And I bet you within the first week, we're going to hear some things we haven't heard before and wonder, how is this ship going to sail? Is it going to be rocky or smooth? And I think every week we're going to have to be on our toes watching American politics and watching this administration. As I said, he's a norm buster, and I don't think that's going to change anytime soon.
Professor Schiller, thanks so much. You really can't say enough about the commitment we have, led by David Gura here, of course, of the Big Take and all of David's work with us on Bloomberg Surveillance, and of course, Joe Matthew and Kaylee Lyons, a political season, Paul. I mean, I guess there's no break.
It doesn't seem like it. No.
What do we do when the ball drops?
Yeah, exactly.
The next morning. I mean, there's huge history here.
Yep.
FDR and Hoover in the middle of the Depression, let's go. It's going to be fascinating to see, to say the least. Futures deteriorate, -18. Euro, 104.94. At a weaker euro, it's come back a little bit. Michael Barr has not been looking at the euro with our news in New York City. Here is Mr. Barr.
Thank you very much, Tom, Paul, Lisa. President-elect Donald Trump will ring the opening bell on Wall Street in less than an hour, and also has been named Time Magazine's 2024 Person of the Year. We get more from Bloomberg's Nathan Hager in Washington.
This is the second time Trump's gotten this recognition from Time. He also did it in 2016, the first time he was president-elect. In a wide-ranging interview with the magazine, Trump said he would use support for Ukraine as leverage to negotiate an end to the war with Russia. He also criticized Ukraine for firing long-range U.S. missiles into Russia. Trump also says he would expand the Abraham Accords with Israel to include Saudi Arabia, would push for a virtual closure, as he put it, of the education department, and he called the electric vehicle mandate a disaster, saying he likes electric cars, but in his words, they're not for everyone. In Washington, I'm Nathan Hager, Bloomberg Radio.
FBI Director Christopher Wray is facing pressure from President-elect Trump. He has announced that he will resign at the end of the Biden administration in January, more than 2 years before his term was set to end.
You, the men and women of the FBI, are why the Bureau will endure and remain successful long, long into the future.
Trump had announced his plan to nominate Kash Patel for director. New York City police say the gun found on the suspect in the killing of United Healthcare CEO Brian Thompson matches shell casings at the scene. Police also said that lab results match suspect Luigi Mangioni's prints to a water bottle found near the scene of the killing. President Joe Biden is commuting the sentences of roughly 1,500 people who were released from prison and placed on home confinement during the coronavirus pandemic. He is also pardoning 39 Americans convicted of nonviolent crimes. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Find a football game this weekend. We go to official streaming expert Paul Sweeney as well. How much does Michael Barr spend an NFL season to be able to watch every game?
See, he doesn't know that. See, that's a problem for a lot of people. We don't know what we're subscribing to. We have to look at our Visa bills every once in a while to figure out, oh, I'm subscribing to that streaming service. I didn't know that. That's the bad news because it's hard to keep track of it all. But the good news is they make it really easy to disconnect. You just have to click a button and you're done, as opposed to trying to disconnect from Bell Atlantic or Verizon or Comcast or any of that kind of stuff.
Is this why I'm still wearing Ked shoes because of the bills that I'm getting right now?
What are you paying for Thursday night football so Mrs. Barr can watch the 49ers lose?
Well, he said it, honey, not me. Well, let's put it this way. You're paying for the streaming, the Amazon streaming. Which is what about
NFL package?
Tonight it's on Sunday night.
Tonight
package.
It's on Prime. Thursday night football
is on Prime.
It's on Prime.
So and we have that too.
We have Prime.
So we're spending hundreds of dollars. Not to mention we still have the old cable set up.
Yep.
So we got the old cable set up.
You have the old cable as well.
Yeah.
My word.
Yep.
And when you look at your betting addiction, I mean, my God, move the decimal point way out.
That's why he's still working.
That's why I eat at White Castle, man, instead of the big restaurants you guys are.
How's the rotisserie league going here?
I'm out.
You're out.
He's out.
I'm out.
Is that why where's Sassower? He's disappeared.
Well, he's a winner probably. Yeah.
He's in hiding?
Okay.
He's on sabbatical.
That's why Rich is giving us a countdown, because he's out too.
I'm really looking forward to Bills-Lions this weekend. I think that'll be a great game. Futures at -16. Stay with us. The Lagarde press conference next.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got red on the screen, and this is after U.S. wholesale inflation unexpectedly rose in November as the cost of food picked up. The producer price index for final demand rose 0.4% from a month earlier, the most since June. And more people filing for unemployment than expected. 242,000 applications were filed last week. We have NASDAQ futures down 0.4%, 105 points. Dow futures down 0.1%, 53 points. S&P futures down 0.2%, or 15 points. The two-year yield, 4.13%. That's down 1 basis point. The yield on the 10-year, 4.27%, and that is little change. To currencies, the Bloomberg Dollar Spot Index, that is little change. We have the Japanese yen up about 0.3%. The euro, that's little change after the ECB cut interest rates as expected, 25 basis points to 3%. Few companies making news. NVIDIA, sources say it's added hundreds of staff in China this year. They're focusing on new autonomous driving technologies. And we go to EV maker Lucid. Its CEO, well, it said it's in talks with multiple automakers about potential partnerships. It wants to share costs, also intellectual property. And finally, shares of Kroger up about 1.5%. It announced a $7.5 billion share buyback program. Comes after its planned merger with Albertsons, well, fell apart. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. On PPI, business inflation, it was elevated, but far more importantly, select statistics on the revision were elevated as well. And, you know, there's a little bit, I'm going to call it a weight to the tape, the two-year, 4.14% in the two-year. I mean, I'm not in the 399 watch. The German yield gets down to where it was December 3rd. So it's basically, you know, a lower yield as well. We're going to have to see on that. Joining us now on the West Coast, always interesting, Julia Pollack joins us, chief economist at ZipRecruiter, to talk here about where we are. If you're sitting in the Eccles building, Julia Pollack, with the governors and the president and that, are you advising them from the left coast that the labor economy is fragile?
Yes, I am. Initial claims today jumped up unexpectedly. That said, it's a wiggly series. I wouldn't read too much into that. But the bigger picture is that unemployment has, the unemployment rate is right back near its series high. There are over 880,000 more unemployed workers now than a year ago, including 440,000 more long-term unemployed workers. So those people have exhausted their unemployment insurance benefits. We're seeing the labor market continue to slow, and those gains remain very heavily concentrated in just 3 sectors.
Yeah, Paul, I can't emphasize enough the advantage of talking to people outside 3 zip codes on Manhattan. Like, you talk to people out west, like my family, about rental properties, they're imploding. I mean, there's not like it's not like, New Jersey where everything's up double digit. It's going the other way. This is refreshing from Julia Pollack.
So, Julia, when you talk to your clients at ZipRecruiter, what are they telling you about kind of their hiring needs, their labor needs as we kind of think about 2025?
Well, we just completed our annual employer survey, and that survey was published yesterday, and it shows renewed optimism for the labor market. We were actually surprised at how bullish employers were on 2025. The vast majority plan to expand hiring. The vast majority plan to raise wages, about 1 in 4 very substantially, with 5% increases or higher planned for the year. And the whole tone was very optimistic. Even when we asked about AI and technological change in their industries, more companies said that the changes were supporting growth and expansion than job cuts.
Julia Pollack with us with ZipRecruiter. She's more important than Christine Lagarde. I'm kidding. We're going to monitor the Christine Lagarde headlines coming out of the ECB. And of course, the number one way we do that is off euro. I'm going to say euro is stabilized to 104.98, and we'll look for the Lagarde headlines here in the next hour. But I'm sorry, Paul, Julia Pollack. I mean, exactly. You got to go with her.
Got to go. Julia, so as we think about kind of the labor pool out there, are employers finding the people they need? What do they need to do to get the people, to attract and retain the people they need?
So employers say they have made huge changes over the past year, and reported turnover rates at the companies surveyed, the 2,000 companies surveyed, fell by 37% over the year. So companies are not struggling as much with recruitment or retention anymore. Everywhere we ask about challenges, far fewer replied that they had them. So it seems as though in a slackening labor market, they are actually finally finding the people they want.
Do you have a belief that the real wage will stay positive if you take wage growth and subtract out some measurement of inflation, that we're all going to feel better 12 months from now? Or do we flip to a negative wage growth?
So, we had 25 months of negative wage growth when inflation was out of control. Since then, we've had almost as long with positive wage gains. And that said, many people are still lagging behind where they would have been absent the pandemic. But every month that we have positive wage gains like this, more and more people feel like they've caught up. And I think that'll boost confidence and consumption in the year ahead. And I don't think that's going to flip. I think the only thing that erodes wage growth is unusually high inflation. Employers are kind of locked into a 3, 4, 5% annual increase at this point.
Hey, Julia, when you talk to your corporate clients, are they thinking about changing any of their back-to-work policies, or is the new norm some form of hybrid that it seems like most of corporate America has kind of fell into, 3 days, 4 days? I don't know. Is that kind of where we are now, or is there going to be any changes, do you think?
It's very interesting. Companies are moving in opposite directions. So 31% enhanced their return to office mandates and pulled people back to the office, and 33%, about the same share, expanded remote work opportunities. Wow. So we have companies choosing the strategy that works best for them.
Are people making the wage that they thought they were going to make, or are we seeing a good job market, but people are taking lesser wages than what they think they're worth? This is a huge deal at the Keene household right now.
So a rising share of workers are dissatisfied with their pay. There
Why?
are several studies that have showed that recently.
Yeah.
Well, people got sort of outsized nominal wage increases in 2021 and 2022 in a very tight labor market where employers had to roll out the red carpet for them. And those have since ended. And people now sort of feel the pinch of inflation. People are not happy with their wage gains, even if they're happy with their jobs.
We'll leave it on that joyous holiday note. Julia Pollack, thank you so much. Love having her on. Chief economist on the left coast with ZipRecruiter. Just a refreshing look at what's out there right now. I saw some survey of Gen whatever. I don't know Lisa, are you Gen Z? I don't even know.
Are you
Gen millennial?
Gen Z are the really young ones.
You're not a baby boomer.
No, the Zs are like the 12 to 27s, I think.
Yeah.
Whatever, but one of those
Gen
crews, they said, what's the average wage you need to survive on?
Yeah.
And it was 200-something thousand a year.
Hello.
Yeah.
I'm like, I remember when you made $100,000 and you thought, that's it, my career's over, done. This is success.
First job, Payne Weber, 1986, $22,500.
$22,000, and you said thank you.
And we partied like rock stars.
Yes.
Yeah.
Back in the day.
And there was that bar underneath the bridge there in Grand Central Station.
Yep.
There's a plaque for Paul Sweeney.
Exactly.
But you made $22,000.
Yep.
And you knew there was a future. There was like, just go to work and do it. And that's I don't.
It's true. I started at $18,000 at a local newspaper. I got you beat.
There you go. All right.
Do you think it's the housing now? I mean, the kids have these rents that are just onerous, to say the least.
Plus, they have school debt.
That's the other thing.
I think that's the other thing that's different.
More school debt than what we had.
Yeah.
Exactly.
Julia Pollack, thank you so much. I had to cut her off because I got Lagarde headlines. The president of the European Central Bank, Lagarde, saying the economy losing momentum. She does see a resilient labor market. Thank you. We just heard that from Julia Pollack. Demand for labor continues to weaken. The economy should strengthen over time. Now, there's a Lagarde quote. Yep. We should play Dave Mason today, shouldn't we?
Yeah. Always.
Traffic. After Lindsey left Fleetwood, he showed up to play with the band.
Right?
Yeah.
I didn't know that.
He's been all over. With one of his big songs. David Mason. He's a little ill right now. We wish him good health.
Knowing what I mean. Cities come and cities go. Still I cannot find a place to call a home when there's a woman.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We join on YouTube around this world. Good morning on your commute across the nation. It is the foundation of New York capitalism. It is the boardroom of the New York Stock Exchange. I've done many events there over the years. You go up the smaller elevators off the trading floor into the room that goes truly back to the late Victorian, even into 1906, 1908 era. The president-elect of the United States, with, I believe, Mrs. Trump, with him, are standing now near the podium, and behind is that iconic image of the Time Magazine of the Year, Person of the Year, I should say, and it is Donald J. Trump, the president-elect, of course, with an active schedule into December, and as Paul Sweeney mentioned with Professor Schiller, of course, front and center. Cabinet selections. Joining the president at the New York Stock Exchange is the vice president-elect, Mr. Vance of Ohio. And yes, now I see Mrs. Trump there as well. They're listening now to music, and we believe we have that image out on YouTube for you. On radio, it is the classic, I don't know, Paul, what is it, 20-foot ceilings, 40-foot
exactly.
ceilings?
It's phenomenal building down the New
Long
York
board
Stock
table,
Exchange.
and of course, this is President-elect Donald Trump. He will ring the bell. He'll do that in 28 minutes. Maybe Christine Lagarde will help him ring the bell. She's speaking in Frankfurt right now. But music playing here, and we're waiting now to hear from the president-elect. He's had a fractious relationship with Wall Street over the years. I'm sure there'll be kind words here today, as there always is. But nevertheless, it is the Time Person of the Year. Here now, the president-elect of the United States.
I brought some of our compatriots along with us. They're going to do a beautiful job for you for the next 4 years. And it's really been something very special. And I have to say, Time Magazine getting this honor for the second time, I think I like it better this time, actually. But we did a good job. We had a great first term, despite a lot of turmoil caused unnecessarily. But the media's tamed down a little bit. They're liking us much better now, I think. If they don't, we'll have to just take them on again, and we don't want to do that. But I do want to thank Time Magazine. I've been on the cover many times. I don't know who has the record, but I can only probably talk well about 25% of the covers. 25% are great. The others I just sort of hide. But it's been an honor, and every time it's an honor, I will tell you. And thank you very much for doing it. And thank the whole group at Time. Really very professional people. Thank you very much. And to Jeff and all of the people from the New York Stock Exchange. He knows how much I like it, because many years ago I bought a building across the street. I wasn't going to buy it. Then I said, you know, it's right next to the New York Stock Exchange. I'm going to buy it. We've had great success. 40 Wall Street, we've had tremendous success with it. But you've really had success with the New York Stock Exchange. It's an incredible group of people. And, Jeff, you have done an incredible job, you and your group. And what a beautiful speech you made. Thank you very much. That was some introduction of all of us. But we've gone up since the election. I was just told by Scott, everybody said, you have to pick Scott Bessent. He has to be the one chosen for Treasury. Where is Scott? Let's see. He's around here someplace. He's around here. He told me we picked up $3 trillion since the election day. And I said, well, that's good, but what about before the election day? He said, we picked up some money there because they thought you were going to win. I said, I like this guy. He's going to be my Treasury Secretary. But it's true. I think we're going to have a tremendous run. We have to straighten out some problems, some big problems in the world. When we left, we didn't have any of these problems. We didn't have Russia with Ukraine. We didn't have Israel October 7th. We didn't have the Afghanistan disaster. We didn't have inflation. We had no inflation. And we had a very strong economy. And we're going to do that again, but I think we're going to even up it because now we have experience that we didn't have. Now I know everybody. You know, when I first came in, we came down, Melania and I, a great first lady, who's very popular, by the way. She rang in. She rang in the bell. She rang in the bell. But we came down and we're driving down Pennsylvania Avenue, and it was so beautiful. I said, you know, I've never done this before. I didn't know anybody. I got to the Oval Office, and I'm picking all these big positions, and I didn't really know the people in Washington, but boy, did I get to learn fast. And now we do, and I think we have an incredible staff behind me and others that aren't here. And we're going to do a fantastic job. We're going to create the incentive theory again. In fact, I just announced yesterday, I didn't announce it for this reason, but anybody investing $1 billion or more gets a very expedited approval process because, you know, the approvals, when people come into the country, it takes them, in many cases, 14, 15, 16 years to get the approval. We have Lee is around here someplace. He's in charge of the environment, and that's Lee Zeldin, who ran an incredible race for governor in New York, was a very, very successful guy before that. He was a great congressman, and he's a fantastic lawyer. He's in charge of environmental, and we'll try and push him as much as possible to get those permits very quickly. Like a nuclear power plant, I would say a week would be enough time. What do you think? Is that okay? We're going to get fast approvals, and it's great that we have Lee and all of the people behind. They're all stars in their own way. But it is an honor, and this is a double because usually they don't coordinate the Man of the Year or the Person of the Year with the ringing of the bell. And brilliantly, you picked them both at the same time, and you were all friends, and you said, let's do it. And it takes one trip. It doesn't take two trips. That's okay. We like to save. We like to be able to do it properly. But this is a special group. So many friends in the audience, too. John, great job you've done at ABC. I'm really proud of you, and you've been so nice to me. Otherwise, I wouldn't actually acknowledge you at all. But you have been. That really is. It's a terrific job you've done. But again, I want to thank you. We're going down to ring the bell now, and I could just say that the economy, I believe, is going to be very strong. We do have to solve some problems. We have wars going on that we didn't have. We have a lot of things happening that we didn't have that would have never happened. They would have never happened, but now they have happened. And I want to get them solved. We have to get them solved because ultimately the power of weaponry today is the biggest threat we have, in my opinion. It's not some of the other things that you read about. It's the power of weaponry. The weapons are so powerful, so devastating. And I rebuilt our military. I got to know every one of them, including nuclear weapons. I hated to do it. Actually, I hated to do it. But we did some nuclear weapons that are so devastating and almost makes you very sad as you get them and as they come online. It makes you very sad because you know what the purpose of them is, and you just hope to God that you never have to use them. Because if you do, the world will never be the same. So we have to be very, very smart. We have to be very sharp. We have to be very special to do a job. And I think we'll get it done. And I think we're going to get a lot of people in the room. We've seen it. We were in France where President Macron did a fantastic job with the cathedral, an absolutely fantastic job, of Notre Dame. And it was beautiful. The opening was the opening, and I just got back, and it was something really beautiful. And a lot of world leaders there. We had about 80 world leaders, different countries, and they were all coming together. They all wanted to meet us and meet me as representative of the U.S., and there was a lot of goodwill. But we're going to get some really tremendous goodwill. I was even thinking about inviting certain people to the inauguration, and some people said, wow, that's a little risky, isn't it? And I said, maybe it is. We'll see. We'll see what happens. But we like to take little chances, but that's not a bad chance. Here's a gentleman that's going to do a great job at HUD. Good luck, my friend, right? He's going to be a star. He's been my friend for a long time. It's nice to see you. I haven't shaken his hand yet. Come on. Congratulations. Thanks. Really, you're going to be great. And Ben Carson is your biggest fan in the world. You know that. Ben has been with us for a long time and he's done a fantastic job. Thank you. Good. So, ladies and gentlemen, go on. We're going to put it straight. We're going to give tremendous incentive like no other country has. We're cutting your taxes. We're going to cut them very substantially. We got them down to 21% from probably 42 or 44%, depending on where you are, and we got them down to 21. Everyone said that was a miracle. Now we're getting them down to 15, but only if you make your product here. Otherwise, you pay 21, which is not bad. It's in the middle of the pack, but 15 brings you down to among the lower. And for those that are running the big companies, those great, big, beautiful companies, nobody's going to be leaving us. You're going to be coming back. You're going to be bringing it back to the United States. We are incentivizing everybody to come back to the United States. We want you back here. Car manufacturers, everybody. And we have one product that nobody has really to the extent that we do. It's called oil and gas. There is no country in the world that has more. We're number one. I brought it to number one during my first term in terms of production. We're going to be number one plus. We'll do numbers that nobody will really see before. And when that happens, prices are going to start coming down because people can't afford their groceries, and they're going to be affording their groceries very soon. I tell the story about a woman an old woman, no money, went to a grocery store, had 3 apples. She put them down on the counter, and she looked, and she saw the price, and she said, "Would you excuse me?" And she walked one of the apples back to the refrigerator and came back to pay for the 2 apples. And she left with 2 apples. And the woman at the counter said that was so sad. And when I heard about the story, I said that should never happen in America. And it's not going to happen in America. We're going to do it right. And we're going to take care of our people. And we're going to do things that nobody ever thought even were possible. But we're going to have an economy the likes of which nobody's ever seen before, and everybody's coming back to America. I saw that the other day at the cathedral. They're all saying, we want to come back, we want to come back. And with a couple of changes done by Howard and Scott and some of the great people up here with me, we're going to bring them all back. They're all coming back. So thank you very much. This is a great honor, and ringing the bell will be fantastic. And go out and get them. We're with you all the way. Thank you very much. Thank you.
The President-elect of the United States, Donald Trump, and for those of you on radio, in the boardroom, up a number of floors at the New York Stock Exchange. Hey, let's see now. I think is he continuing to do? No, I think he's walking away right now. Okay, with the assembled behind him, including Mr. Kennedy and Mr. Bessent, the Secretary of Treasury, and of course the First Lady-elect as well. He will descend the elevator to that lovely podium up there. What a moment there to have Charlie Pellet and Ken Pruitt.
Oh, wow. Okay.
Opening bell. A tear in my eye.
You're right. Very
Charlie
good.
was there. Stand clear of the opening bell was what we heard from Charlie Pellet. But the President-elect will ring the bell here at the New York Stock Exchange. We welcome all of you worldwide. Patiently waiting is someone that the President-elect would read, and that is Brian Belsky of the Bank of Montreal, BMO, because Brian Belsky has said you need to invest in America, you need to be long this economic enterprise, and he joins us now patiently waiting. Brian, to give you as much time as we can, just give us the overview of extending into a third year of this great bull market. How do we get there?
Well, thanks so much for having us, Tommy. It's always a pleasure, and good morning, Bloomberg. We've been bullish consistently and in print, which is different than a lot of people just out there spouting it. We've been in print and published research reports bullish since 2008. And we kind of segued the call in 2010 to say we're entering a 20 to 25 year secular bull market. We continue to firmly believe that. I think many people are on board, quite frankly, Tom, that we're entering a third year of a cyclical bull market, but nobody we talk to believes in the secular bull. We still think that the best asset in the world are equities in the United States, followed pretty closely by Canada, by the way. We think developed markets will be led by these 2 countries for years and years to come. Right. We still think Europe's in trouble. We still think emerging markets is in trouble. And we think that stock picking is going to reign supreme. And we've already started to see some of that with small caps doing what they've done. And so we think that there's a long runway here, Tommy.
The hallmark of a Belsky report, which you hate, folks, is 9 dense pages of acuity. You'd never believe it, but it's one of the most difficult, onerous reports to read because it's so tense, so intelligent. Brian, within that, do you see double-digit earnings growth and legitimate free cash flow growth?
We do. And one of the things that, quite frankly, drives us crazy is everyone talking about this momentum investing. But if you go back to 1990, in the U.S. stock market, and you look at rolling returns, the best 5 factors, which everybody wants to talk about factors, are fundamental. Number one's low price, but the rest of them are price to free cash flow, enterprise value to EBITDA, earnings growth increasing over the next 3 months. So I think we're returning to that slowly, which again favors amazing assets here in the United States. And that's why we're overweight technology, financials, and consumer discretionary, and a little bit in the communication services area, especially considering those are the growth areas, but really from a consistency of growth basis, Tommy, they're the most consistent growers.
Hey, Brian, we just heard President-elect Trump speaking at the New York Stock Exchange, I guess one could call it the global bastion of, kind of global Wall Street here. Talk to us about financials. You just mentioned financials here. A lot of folks feel like financials will benefit from this new administration. How do you think about that group?
We do. We've been very thematic players and very bullish for financials for a while with this theme of scale, Paul, meaning the big financials, the big money center banks, because they have multi-divisional assets from wealth to personal to commercial banking to investment banking. We think that they're going to see massive deregulation. And why? Because we think those medium-sized banks, a lot of regionals, can't compete with the big money center banks, let alone the Canadian banks coming down to the U.S. to compete. So we think the theme of the really big consolidation and the really small, we're going back to relationship banking. That's why we like a stock like Glacier Bancorp in Montana, quite frankly, because that's all built on very strong balance sheet, very strong cash flow, and very strong relationships, Paul. So we're long financials. We love it. And then given where we are in the yield curve too, that's going to be very, very positive for the banks.
How about the big technology companies there, Brian? They've had just such a run, and a lot of folks feel like the market can't really move higher unless we have tech leading the way. Are you in that camp?
Well, he came in before the hour with Dave Mason. We just disagree. Let's just say that from 1977. And I'm a Gen Xer, so I remember that on the radio. We're overweight tech. And I think the best thing to do with tech is you've got 5 or 6 techs that are tech companies or communication services companies that are the consumer staples type tech. Whether or not it's Apple or Microsoft or Netflix or Google. We think you maintain positions there, Paul, but you really want to build where your alpha, where your high Sharpe ratio, risk-adjusted returns are going to come from, is going to be in the Oracles, the Palantirs, the AMDs, the Qualcomms, the Salesforce. That's where you're going to see the most alpha, and you're moving down a little bit of market cap. But we think technology has a long runway. There's a bubble is not near. There's no bubble anytime soon. You got a lot of people out there talking about a bubble. You can't have a bubble, Paul and Tommy, until everybody's making money, and everybody's not making money in AI because we have no banking cycle, no IPOs, no consolidation. And so I think that's one of the key metrics.
Brian, out on YouTube, somebody just said, can we have Belsky on 5 days a week? Go away. Brian Belsky, thank you so much at BMO Capital Market. We protect the copyright of all of our guests. Look for the Belsky research along with Ian Lingen, among others, at BMO. Strong, 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 to say the least. Lagarde in her press conference, this is sort of inside baseball. ECB didn't discuss the neutral rate this week. She sees a loss of momentum. Right now, a Bloomberg Business Flash is Lisa Mateo.
And this features report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we've still got futures pointing to a lower open, signs of still elevated inflation pressures. Thoughts of the Fed rate pause in early 2025. Well, they're keeping investors on edge. The ECB kind of set the stage for it after it met expectations for a quarter-point interest rate cut. We have NASDAQ futures down 0.5%, 119 points. Dow futures down 0.1%, 58 points. S&P futures down 0.2%, or 16 points. Finally, the 2-year yield, 4.15%. That's little change. The yield on the 10-year, 4.28%, and that is up 1 basis point. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul on top.
Lisa, thanks so much. Across this nation on your morning commute on Apple CarPlay, Android Auto, Good Morning in Washington, 99.1 FM. We just heard from the President-elect of the United States at the New York Stock Exchange. He is in transit. I've done it. 3, 4, 5. The elevator was built in like 1925.
You fit like 3 people in it.
You get 3 people in it, and it's got the little door, and good luck with that. The president, probably President-elect, you can probably get him and one Secret Service guy in the elevator, and that's it. Down they go, and he will ring the bell here in about 10 minutes. We'll bring you that pageantry, as they say. Speaking of pageantry, onto the bond market, where the gentleman from Strategas is focused on the debt and or deficit.
I guess.
Well.
I mean, Tom Sasoris joins us. He's fixed income research at Strategas Securities. Tom, I mean, as we think about this new administration, we think about maybe lower taxes, maybe some tariffs, maybe a little bit of inflation in the marketplace. From a fixed income perspective, how did you guys adjust your outlook after the election, if at all?
And the answer is not at all.
Okay.
Because, first of all, for 2025, the outlook was going to be the same whether it was Harris or Trump in the White House, because spending is already set. In fact, the only real variable is revenue, and that's actually going to come in on the higher than expected side. So the deficit should shrink next year. The question becomes 2026. And so there's this argument, well, are tax cuts going to be more deficit inducing than spending? Maybe they are. But what we're talking about is maybe adding another $200 billion to a deficit that has gone from $1 trillion to $2 trillion. At some point in time, it's a rounding error. Now it's material, but it's not the key point here. We're talking about still $1 trillion plus deficits, no matter who's in the White House. Mm-hmm. And I think that's what the bond market saw and has again adjusted for it. There's going to be a supply issue no matter who was there.
All right, I'm not a bond. I'm an equity guy. But when I see the Fed cutting rates, yet I saw the Treasury market, I mean, the yield's going higher. Yep. What's going on out there? Is people really concerned about that inflation?
Well, it's sentiment. Like we can say, it's that old argument. The market can remain irrational longer than you can remain as solvent. Right. And I think that's what happened. The Trump trade took off.
Did that quote come from Jason Trenner? See,
it's a very logical quote, so I can understand why you might think so. But the sentiment was simply put, the Trump trade was going to cause the dollar to spike, the yield curve to steepen, bank stocks to rally, and that's exactly what we've seen. And then all of a sudden, one day people say, okay, has this gone too far? What does this really mean? Now we're at the point where, for example, with the new Treasury Secretary nominee, some confidence has come back that the bond market is not going to be dominated by runaway vigilantes. So reality is setting in that, we're going to have a deficit problem at some point in time. We're going to have a second wave of inflation. But these were going to happen no matter who was in the White House.
Jason Trenner to join us on Fed Day, December 18th. He's going to be brilliant because he takes his cue from you. What are you telling Mr. Trenner about the cut and then what?
Well, we got a cut coming in December. It's locked in. The market says it's
then
locked.
What?
Pause. CPI number yesterday is telling us that it's sticky. It's not going to come down as quick as the Fed wanted to. And if you keep cutting, it's going to start to accelerate. It's going to accelerate anyway, but if you keep cutting, it's going to accelerate sooner. So they need to see more data. The labor market is showing continued small cracks here, and I think it will continue to do that into next year. So that means that the Fed cuts in December, they pause in January, and if assuming that the labor market continues to show some seasonal weakness in Q1, then they cut again in March.
Credit risk here. How much credit risk should investors be taking here? Because you can sit and hide out at a 2-year Treasury at 4.15%.
We've been very conservative with our management of our portfolios that we manage at Strategas, and we've been exclusively investment grade. Now, within investment grade, we still have a pretty good sized overweight, so we're very comfortable with, we'll call it, large cap investment grade names, especially as you look out towards 2025, where we see really no risk right now of a recession, and that's really the risk when you're looking at investment grade credit. High yield's a different story. It's very, very tight. And you're always four quarters.
That's where the performance has been this year. I mean, really outperformance.
It has. And the problem with high yield, and for many bond managers, is one, it may not be part of your index. So with high yield, you're always 4 quarters away from default. Okay. And that's the problem that you face. So what are we looking at 2026? We could be looking at stress building. So high yield looks a little too rich to us. Investment grade, we're very comfortable with it.
How about all the investment grade new issuance? I mean, just since September was a record month of new issuance. I mean, what does that tell you about the market? It feels like people are pretty comfortable out there.
Well, I think what we saw in September was 2 things. 1, the drop in interest rates over the summer, and 2, borrowers who wanted to get ahead of the election. They wanted to refi before the election because they didn't know what the results were going to be. Gotcha. And now we should see a little bit of a lull.
I'm looking here again. We're coming up to 5 minutes away from the pageantry of the president-elect of the United States at the New York Stock Exchange. We can see now the imagery. I see a big ad for Time Magazine. Of course, they've named the president-elect Person of the Year. I think no surprise there at all. He just made comments with Paul. I was surprised. Like, he called up everyone and said, you got to be in New York.
You got to get down to the New York Stock Exchange. So a lot of his cabinet appointees were there behind him there at the New York Stock Exchange, including as well as his wife.
Yeah,
Melania.
Mr. Kennedy was there, and the
Vice
First Lady was
President-elect
there. The Secretary of Treasury designate was there, and a few others as well. Assembled, and we're waiting for this. We'll bring it to you in a moment. A more populated floor today than not. Link in, Tom Tesouris, your bond world into equity worlds. Are they correlated day to day, or are they disparate?
I think they're correlated day to day, especially when you see, let's just focus on 10-year treasuries getting up to that 4.5% level. You can kind of make an argument that every basis point above 4.5% starts to put downward pressure on equities just from the multiple impact. So there's a correlation, but where the levels we're at right now with yields, there's not as much correlation as you might expect.
So in the fixed income space, I mean, how concerned are you? How's the credit quality out there that you see? It seems like we haven't had a credit problem in investment grade. Even in high yield, we haven't had much of an issue. I guess it's all the stimulus that came in.
That's a substantial part of it, is that we've got a great deal of stimulus. We also have a lot of earnings growth, and that certainly helps, particularly for the investment grade space. But I would say you kind of just got to put things in context. The last 3 recessions have been particularly horrific for investment grade, and that kind of has formed our foundation of what we expect. But that shouldn't be the expectation. Corporate fraud, financial crisis, pandemic, those are not the norms. The normal recession doesn't see a lot of pain in investment grade.
Are there some sectors maybe in investment grade fixed income that you guys like right now?
Well, it follows along with our views on the equity markets as well. But there are some sectors that are trading cheap in equities and fixed income, for example, materials that we would like. And we also like financials, we like energy, we like industrials. So it follows along a lot with our equity outlook.
Tom, thank you so much. Tom, stay with us, please, and watch the pageantry here as we look to the president-elect. Some applause at the New York Stock Exchange right now as we are 3 minutes away from the opening bell, waiting for an image of the bell. The bell goes back to 1870.
Does it?
Ken Pruitt rang, the first year or two. He rang the first bell as well. Now the imagery there, this is, of course, Time Magazine with their Person of the Year, and it is the president-elect assembled with family members, including the First Lady, and the Vice President-elect as well. Mr. Vance is there this morning, and 1, 2, 3, 4, 5, 7 or 8. It's not a packed balcony, I would say. Not family that members. Packed, but nevertheless, there it is. And the symbolism here of this linkage between Main Street and Wall Street has been a fractured relationship, and it's something that the president addressed here in his comments. Paul, your thoughts at this moment?
Well, I think I guess we all kind of first came to know Donald Trump through his New York persona and his real estate business. Persona,
I think captures it with the Apprentice.
Those of us that have been in New York for a long time, I mean, we've kind of known Donald Trump for a long time, first as a real estate person, then as, his television show, and now, of course, in politics.
And lots of controversy, to say the least. He mentioned 30 Wall Street in his comments earlier.
In the boardroom. But he's been a fixture of New York City and the New York City finance and real estate for many years, decades, actually. To sort of see him at the New York Stock Exchange kind of brings it all full circle for those of us in New York.
The backdrop of this, and my theme into the end of the year, is the great bull market. I take it back to Christmas Eve of 2018. Ben Laidler was just brilliant at the time at HSBC of just saying, get on board. You just heard Brian Belsky with a structural call on a bull market versus a cyclical call as well. And of course, the bears and those cautious have been pushed aside. There's no question that the president-elect cares, like maybe Alan Greenspan, about the spirit of the market. We're into the countdown now. Within 1 minute of this historic bell, and then Lisa Mateo will bring you the market update. We go in with futures at -12 and the VIX nicely. It's a president-elect Trump VIX. That's what we've got this morning, 13.60. For those of you on YouTube around the world, the imagery of the president-elect to ring the bell. Come on, I want Mrs. Trump to step forward. Elbow him right out of the way, and the First Lady should ring the bell. I mean, we'll see what we see here as well. We welcome all of you on YouTube around the world, across the nation, and of course on Bloomberg Radio on your morning commute. as well. And now let us tune in and consider the president-elect and the opening bell. I finally let up with the button. I thought that was an unseemly long opening bell.
Yeah, he's president-elect. He can do whatever he wants. And again, here looking at the markets, we'll get to Lisa in just a moment with the reporting. But kind of a mix here today. But it's been a tremendous year for the S&P 500, Tom, up 26-27%.
Yeah,
so the indexes are just had a wonderful year.
The heritage of what we do, I mean, we make jokes about the triple leveraged all cash fund. Tom Tesaurus is in that with Strategas, but we don't give our opinion here, but to Gina Martin Adams, that's our most important conversation of the day.
Yeah.
On earnings growth, on free cash flow growth, she's modeling out a consensus 12%, and she says the market's modeling out a much higher statistic than that.
And I think that's going to be the story in 2025 for whatever equity performance we get, Tom. It feels like it's going to be really earnings driven as opposed to geopolitics, the Federal Reserve, other types of drivers historically that we've seen in the marketplace. It's going to be a year perhaps when you hear some of these strategists talking about earnings going to need to come through in a big way to move this market higher.
We have to see, and the American consumer is continuing to be buoyant. You mentioned that earlier, the 70% of the American economy. We look at equities, bonds, currencies, commodities, and of course the stock stories of the day. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
Yes, and this opening bell report brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with a new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, let's get right to the market. So the S&P 500 down about 0.1%, 11 points at 6,072. The Dow, little change, down 6 points, 44,151. And the Nasdaq down about 0.3%, 78 points at 19,952. We have the 2-year yield 4.15%. That's little change, and the yield on the 10-year 4.28%, and that's up about 1 basis point. We have the Bloomberg Dollar Spot Index. That's little change with the Japanese yen 0.1% higher. The euro is down about 0.1%. We have the British pound down 0.3%, and Bitcoin over 101,000. Have to check in with shares of DJT. That is down about 1%. We also have shares of Adobe, we've been talking about all morning long, down about 10%. That is your Bloomberg opening bell report. Tom and Paul.
Lisa, thanks so much. I have been remiss, and this is my fault, in that basically, Paul, my sophisticated analysis of international investment is where's the dollar? It's about as far as it goes. Right. And I believe I'm looking at the Bloomberg terminal and I'm seeing resilient dollar. Lagarde, I don't know if she's still speaking, 104.83 right now. On a weaker euro, DXY's popping 106.7. It's a resilient dollar.
It is.
Someone that really looks at this is David Sammer, of course, with Artisan Partners for years at Harris, and we're thrilled that David could join us this morning. David, is MSCI, EIEIO, is there value in the international, or is it a classic value trap?
Well, there definitely is value. If you think about it on a relative basis, there is certainly value because you have much higher multiples on very, very similar companies in the United States than you have on companies that are listed outside the United States. Again, in very, very similar businesses. And you've seen a little bit of a trend of companies that are listed in places like London that are moving their listings, and there's actually activist activity to push companies to move their listing to the United States, and they immediately, because of the difference in liquidity, get a bump in their valuation. There's no change in the fundamental aspects of the business, but the valuations bump up very simply because companies in the United States are carrying much higher valuations than companies outside the United States.
David,
so there is value there. It's just not recognized because of the difference in liquidity flows.
So how do you adjust for that, David? So when you think about, when you talk to clients about investing outside of the U.S., where do you see the best opportunities these days?
Well, what we see is actually an aggregate representation of better values relative to investing in the United States. I'm not saying that there's any serious degree of undervaluation that exists outside the United States, but when you look at the multiples on a relative basis on like-for-like businesses, you are getting a better deal than you're getting in the United States. And so if reversion to the mean works over time, then you will get better returns and higher expected returns outside the United States and inside the United States. And again, that's on a like-for-like asset, right?
One of the charming things you do is you talk about individual securities within your published research. Give us an example of an individual big cap stock internationally that has American oomph characteristics.
Well, let's just talk about Alibaba. I know it exists in a country that is currently going through an economic downturn, but it is, the largest e-commerce player in China. It does have a competitive dynamic, just like Amazon competes with Walmart and Target and other e-commerce players. But the valuation is at 8 times earnings, and the company doesn't have any financial risk. And in fact, it's growing. It's growing its revenue and it's growing its profit base. It just very simply resides in a country that happens at this point to be going through an economic downturn. That's a very, very good and perhaps very dramatic example of some of the differences. But you have, cement companies in the United States trading at 25 times earnings and in Europe trading at 8 times earnings. In fact, we own a company called Wholesome. It's listed in Switzerland that's actually breaking itself into 2 pieces. It's North American operations, which is likely to get a 25 plus times earnings multiple, and then it will have its European operation that will probably trade at 8 or 9 times earnings. The differences are dramatic.
David, I believe your portfolio's largest holding is Arch Capital. What is Arch Capital and what's the call there?
Arch Capital is a Bermuda-based property casualty insurance company that, believe it or not, we have owned for 20 years. And we've watched book value compound from $1 billion to $20 billion. And what that represents is a fantastic management team, a fantastic corporate structure, and an ongoing ability to navigate what is a very fragmented and complex industry. They are just very good at generating high returns in a complicated industry. And that's the gist of Arch Capital.
What'd you learn from the banking crisis? I mean, your association, David Samra, folks with us now, international, which I'm not doing enough of, with Artisan Partners out in Milwaukee. And, I look at David Harrow and David Samra and the rest of the international value compound. Paul mentioning Milwaukee here is a really lodestone of long-term management. What did you learn from the banking debacle of Switzerland 18 months ago?
Well, what we learned, banks are inherently leveraged institutions. And the moment that you slip on a banana peel, and what I mean by that is make bad decisions about the asset side of your balance sheet. And so the moment that you slip on a banana peel in an inherently leveraged institution, that becomes devastating. And so the culture inside of a bank is what really matters. And because banks are integral to any economy, we all live in credit-driven economies, and one large bank can cause significant issues for the entire banking system and the entire economic system. And so what I think that the larger universe learned is we cannot operate with the same type of leverage that we operate with pre-financial crisis. And post-financial crisis, we need to be despite having larger capital requirements, we need to be very diligent about the culture that exists inside some of these larger organizations.
And maybe the European distinction. David Sammer, thank you so much with Artisan Partners at Milwaukee there. Paul, this is my fault. We haven't done international enough. I mean, we only do Damien to keep Damien happy.
Exactly.
Other than, I've been really remiss on this. Did you see Brazilian real? The new weakness, like a 6 almost.
Okay. All right.
I mean, there's these little stories, folks, that are off, what's Apple doing today radar. Lagarde stopped speaking. The press conference is over. They'll debate the neutral rate in Europe the more as they get closer to it. I'll have McKee translate that. I'm lost in translation.
He's the one.
Well. Red and green on the screen right now. Dow up 6. NASDAQ off 0.5%. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. President-elect Donald Trump said he would use U.S. support for Ukraine as leverage against Russia to negotiate an end to the war in an interview with Time magazine. Trump, a longtime skeptic of continued assistance for Ukraine in its fight to repel Russia's invasion, was pressed in the interview published today on whether he would continue providing assistance for Kyiv. Meanwhile, Trump was named Time magazine's Person of the Year. He spoke to reporters about the honor and his next term in office just before he rang the opening bell at the New York Stock Exchange.
I could just say that the economy, I believe, is going to be very strong. We do have to solve some problems. We have wars going on that we didn't have. We have a lot of things happening that we didn't have that would have never happened. They would have never happened, but now they have happened. And I want to get them solved. We have to get them solved because ultimately the power of weaponry today is the biggest threat we have, in my opinion.
Meanwhile, Donald Trump has invited China's President Xi Jinping to his inauguration in January. The incoming White House press secretary confirmed reports. China's foreign ministry says it has no response to offer at this time. South Korea's opposition has filed a second impeachment motion against President Yoon Suk-yeol. The motion was filed after Yoon made a defiant speech earlier in the day in which he tried to justify his shock martial law declaration last week and insisted he would fight any case against him. Yoon through an interpreter.
I decided to invoke martial law, judging the current situation of the country's national affairs being paralyzed as a state of administrative and judicial collapse caused by social disturbance.
The impeachment motion has a higher likelihood of passing as more ruling party members indicate they will support it with at least 8 votes needed from the ruling party to pass. Fire officials in Southern California say firefighters continue to battle the Franklin fire in Malibu. About 6,300 people are still evacuated from their homes. It is about 7% contained. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. In this swirl that's out there, there's got to be like a keel of a boat. There's got to be like one thing I look at within Lagarde in Frankfurt, the president-elect, this, that, all the stock stories Lisa's got. Paul, the 10-year real yield, 1.97%, really is just churning. I mean, it hasn't given me an action point, like above 2% or below 1.90%. When everything's said and done, and Tom Sartoris alluded to this, there's just this thing going on.
Yeah, it feels like, we talk to folks like Ira Jersey, for example, Bloomberg Intelligence. He kind of feels like we're in a little bit of a trading range here as you look at, the 10-year Treasury here, 4.29% here. It kind of feels like 4.5% is kind of the trading range that we've seen here. And until we get a better sense of where the Fed's going to go, Tom.
We're going to see. We've got headlines. Donald Trump speaking right now. We're trying to get that for you. He's talking about what matters to Bloomberg Surveillance, and that is a dividend in capital gain taxes. That according to CNBC right now. Red and green on the screen with the VIX 13.77. Thank you out on YouTube. Subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks mostly lower. This is after NASDAQ closed above 20,000 for the first time yesterday following CPI data. This morning, more economic data out. Jobless claims rose from the prior week, topping estimates. U.S. wholesale inflation, that unexpectedly rose in November as the cost of food picked up. This morning, the NASDAQ down 0.4%, 83 points, 19,950. The Dow up 0.1%, 44 points, 44,193. The S&P 500 down 0.2%, 15 points at 6,068. The 2-year yield 4.15%. That's little change, and the yield on the 10-year 4.29%, and that's up 2 basis points. We're following shares of Tesla this morning. They're down more than 1.5%, and this is after the stock closed at an all-time high yesterday. That was amid a $556 billion rally in the past 6 weeks. And finally, shares of Warner Brothers Discovery, they're up 10%. Said it's restructuring into 2 operating divisions. One's going to be focused on the legacy cable TV business, the other on streaming and studios. And experts telling the Journal it could set the company up for some deal making down the road. That's why those shares are higher. As far as after the close, we're on to Broadcom and Costco. That is your Bloomberg Business Flash. Tom and Paul.
Oh, Paul Sweeney, what took so long?
Exactly. Yeah, I think these companies, obviously, they're just trying to align their assets where they think the growth is going to come from, and that is going to be from the streaming business. So you align your streaming assets with your content creation assets, i.e. your studio, and you kind of cut everything else loose.
From 2018, I'm trying to get the chart back here. I think I've got it. From 25 down to 7, and we've exploded up to 11. I'll give them that. They got the stock pricing back to where it was a year ago, collegially.
Yep.
But I mean, it just, I look at the free cash flow. I mean, look at the FA screen right now, and there's just, where's the growthiness? I don't see revenue growthiness. I got an EBITDA margin, and they're managing that. Mm-hmm. I'll give them that. But where's the growthiness?
It's, you hope you can replicate what Netflix has done, Tom, there, where the growthiness comes from growing your subscribers and charging them more every month.
I'm looking at Gautam Mukunda, and I'm doing selfies with him, Yale School of Management. And of course, down in the New York Stock Exchange right now, the president is working the floor. It's like he's selling takeout at McDonald's. He's going from floor to floor. You know who's missing here? Art Cashin.
Yes, exactly right.
Art Cashin would, he'd say like, Mr. Trump, would you like a selfie with me?
Yeah,
and
exactly
Mr.
right.
Trump would be honored.
Absolutely.
The late Art Cashin missed at the New York Stock Exchange. The president-elect ringing the bell, and of course comments made a half hour ago with the Secretary Treasury designate assembled as well. We get perspective on that event and the event forward known as the second term of President Trump from Gautam Mukunda, professor at Yale School of Management. Is this going to script? Do you feel like this is... it's not Grover Cleveland Alexander, but do you get the feeling into a second term it's working out?
Well, it depends on what you mean by working out. The script is what I think a lot of people anticipated, and so far...
His comments this morning were sort of on script.
They were on script, they were normal, and I would say there are 2 scripts. There's the public script, I'm going to be a relatively normal mainstream Republican script, and there's going to make some big changes. And then there's the other script, which is Pete Hegseth, Kash Patel, people like that, Steve Bannon and Steve Miller returning to positions of power. That's the other script. And that one also seems to be proceeding forward. Now, which of those 2 scripts will be dominant for the next 4 years is kind of the ultimate question. But that's going to decide a lot of things.
How do you think this U.S. Senate is going to deal with some of the more controversial nominations for cabinet positions by President-elect Trump?
That's the big question. Opposition seems to have focused in on Pete Hegseth, largely because every week there seems to be another new Pete Hegseth scandal, and they seem to be worried that there's more coming out. It looked like he was in a lot of trouble up until a couple of days ago when Joni Ernst kind of surprisingly said, well, I'm pretty open to him, clearly in response to a lot of pressure from the movement. If he's confirmed, it's hard to see. It's hard for me to imagine who won't be, because given just the number and quantity, and just the fact that the Defense Department employs over 2 million people.
Wow.
Pete Hegseth's last managerial experience ended when he was forced out for mismanagement and being drunk off his party. This is a problem. So if the Republicans are willing to bite the bullet and confirm him, it's hard for me to see who they wouldn't confirm.
The book is picking presidents. It was important in October and into November, and maybe just as important now. I guess we have picked a president. Like all presidents, he will become overcome by events. Is Syria big enough where it's his first overcome by events?
So Syria's huge. And he's going to get, however isolationist you want to be, he's going to get deeply acquainted with events in Syria. And as Tom Friedman said that today, countries tend to in the Middle East tend to either implode or explode, and Syria seems like it's in an explode phase, which will certainly ripple through. But I wonder how much his own tendencies towards disengagement will push in. He'll sort of say, look, if there are more refugee flows, that's not our problem. We're sort of stable. I would be more suspect that the thing that will draw him in is Ukraine. Ukraine is too big to be ignored, and it will just pull him in over and over and over again, because pressure to make a settlement, that's just not going to come easily. The two sides are so far apart on what they would demand that absent Trump essentially forcing the Ukrainians to surrender, which I cannot actually imagine him doing just because of the political blowback that he would feel, I'm not sure how he avoids getting tangled up in that.
It's been a long time. I can't remember when we had a president come in for a second term, not, sequential.
Grover Cleveland only happened once.
Thank you very much. Is this a lame duck presidency?
Yeah. So the analytics that's really interesting is we're seeing a contest of two forces here, for the sort of control of the Republican Party. So one, the reason that Matt Gaetz went down, the reason you saw initial opposition to Pete Hegseth, and I think the reason you're going to see a lot of people who are looking at Kash Patel and going, come on. Is going to be that for the first time since Trump took the Republican nomination in 2016, Republicans don't need him anymore, right? And need defined as we need to get reelected. So if he is not going to be on the ticket in 2028, absent sort of massive changes to the Constitution, and so they cannot say, well, I have to live with this or I have to support this because I need him. That story just went away. The flip side is his control over the base of the Republican Party has no precedent. He is more popular with Republicans than Eisenhower or Reagan. We have never seen anything like this. And the blowback of Republicans who stand against him is very real.
I got to sum this up, and we've only got 1 minute left, or a minute and a half. But Professor, this is so important. Apple went public 1980 today. On the Bloomberg terminal, this is from 1982. I had Grandpa Sweeney bought you 100 shares, Paul?
Yep.
$3,200.
Okay.
Apple, 100 shares, $32 per share.
Yep.
Split adjusted. With the dividends of $196,000, your $3,200 is now worth $213,000, nice. 20% per year. That's what the president-elect was talking about. Maybe not that articulate Bloomberg way, but that's the experiment, Professor, right?
I mean, if we could all deliver that, one of my best friends is one of the world's best-selling fantasy novelists, and he bought Apple the day it went public. I asked him if he made more money off one of his books or Apple. His answer was the books, but it's a lot closer than you would think. But I mean, the basic problem here is we know that labor markets are sort of as tight as they can be. We know that the Fed will respond to faster economic growth by raising interest rates. We see that inflationary pressures have not gone away completely, and on some basic level, there are surely hard limits to the U.S. economy that mean that we couldn't possibly do 20% a year, wonderful as that would be. I would love to see what will really happen. And to me, where that growth trajectory will really come from is we're looking at biotech, and that places in there that there's that sort of deep technological progress that has been building for a generation, and you're starting to see the S-curve bend.
Right. We're going to talk about that tomorrow, folks. Tomorrow, an extended conversation with Gene Munster and Dan Ives on this technology moment that we're seeing across America. I've seen a couple essays here in the last 48 hours just saying this embedded, not AI, but is embedded technology lift that we're getting is really quite substantial. Gautam Mukunda, thank you so much, with Yale School of Management. Brian Belsky was listed, and he's loving Dave Mason.
He is?
Dave Mason, way back. Not with Spencer Davis, but singing backups on this classic.
Is that right?
Good morning, good recovery, Dave Mason.